Hmm. Oh boy. What are you doing, Booksy? This times it's really personal. This times it's personal. No, really. So this is going to be a really, really controversial video for some people because they don't know how to mitigate expectations. I'm not going to sugarcoat what I'm seeing, but I do think that a lot of people are going to be like pretty annoyed. So I'll just start with that. There's nothing here that's financial advice, but there's something really strange that's happening in the market right now, which I think is worth talking about. Hopium overload. This time it's personal. Come on, everybody, let's get on the squeeze train. Yay! Oh, please, God, Booksy, don't do it. Stop with the Kermit. Stop. I should have been the next Kermit the Frog. I don't know why Brian Henson decided to do it. I mean, he's just related to Jim Henson, but come on. Nepotism much? I mean, come on. I'm just joking, guys. I actually probably could have been. I really legitimately don't necessarily always sound like it perfectly, but I can do it ridiculously good. Way better than the average Joe, Kermit the Frog. It doesn't even make sense. And I don't know when I figured out I could do it. I just could. And then I was like, you know what? I could totally do a Kermit the Frog impression. And I could have just played Kermit the Frog. If you're in person with me and I'm doing it, it sounds legitimately exactly like Kermit. It's kind of scary. But that's not what we're here to talk about. We're here to talk about potential squeeze event. I can do a little bit of Miss Piggy, but that one's harder for me. But part of it's like a lot of the voice actors did a lot of the other characters. So if you could do one, you can kind of like shift over and do another one. It's really interesting. Not Piggy and Kermit, but there are a lot of their shared. Anyways, we're not here to talk about Muppets. So I noticed something really peculiar, and I wanted to point it out. And I don't feel that this is going to be an easy stream to deal with because I was looking at. Remember how we were looking at AMC? And we did a lot yesterday on AMC. If you missed it and you want to check out AMC stuff, you're more than welcome to scrub through the video yesterday. We did a lot of stuff on AMC yesterday. But one of the things that stood out to me was there was this shrinking iteration, as I call it. Okay, now this is nothing new, particularly, but this is a shrinking iteration that should have some kind of like it's not going to be a breakout, in my opinion. It'll be like a momentary like squeeze event that pops pretty far, pretty fast. And I'm talking about like when it goes, it should be running like some 50% or so, okay? Pretty fast, all right? That's a pretty big move. If you think about percentage-wise, that's a pretty big move. But one of the things that I did not think about was what happened back here on February during all that commotion was this strange change of character that happened that really didn't happen until March 3rd. And I know there was a lot of tariff news back here and whatnot, but I guess I can't really pinpoint it at this point. I have to go back and remember exactly what it was. But there was something strange in AMC's chart during this time period. We had earnings, and there wasn't really much to earnings, but the one really surprised me was the volume. That there was like no volume at AMC earnings which was back on February the 25th, right after the 24th. Now, to some people, you're like, well, you just said it's a shrinking iteration, so why would you say that, it would ever have been any different? Well, I'm not sure it would have been considerably different, but I think that at that time, we were really just looking at another push to 4. It was not this controversial, like, massive run could have happened type thing. It was really just a simple, like, 30 cents that just didn't happen. And it was very strange to me. It was almost like the market propped it up and then it built out a base that wasn't distributive and it wasn't accumulative. It was just nothing. And I distinctly remember being like kind of lost because I was like, it's not really making a decision here. I remember it made like a double bottom and we talked about that, and it made a double top and we talked about that. And I was like, this is a very strange thing that's happening on AMC between February 24th and February 28th going into the next week, which is March 3rd. Okay. I was then looking over at Tesla again, and I noticed that the first target that I had, which was this 301 target to 309 target, that was the one we were pumping up here. There was a trend upward towards that target. We went like the opposite way, like complete reversal, the opposite way. Normally, I wouldn't be like in a position to say like, oh, this is definitely going to reverse or something like that. But something curious happened, which I don't really have a great explanation for other than just to say it's there. And one of the things that happened was that when we started going the other way, the market did not abandon the target. Instead, the target is ever present. And this is a strange thing to me because I'm looking at this like, there's no way. This is such a huge move. This can't possibly happen. But what occurred to me this morning as I'm staring at the chart was like, these are accelerating. They're not just accelerating downward, which is what I was thinking before, was like these markers are going down, but they're kind of consistently going down. They're going down at very similar angles, this 1, 2, 3 repetition. I'm like, this seems very familiar. This repetition seems really familiar to what I'm seeing on AMC with this shrinking iteration. And the only thing that's really been accomplished in this is just really bringing the market down to this oversold territory, which usually prompts some kind of an automatic reaction. So when I say market squeeze event, I'm not talking about a squeeze event that's going to take SPY to new all-time highs. I'm really talking about an actual automatic reaction to go back to the previous range and test it. And weirdly, like we haven't really seen that. We've kind of seen this, and I think this is probably the closest we're going to get on Tesla, for example, unless we can continue to go deeper and deeper into this one chart, but I'm not going to do it. Anyways, point is, this is the curiosity that I found this morning. So I'm sitting here staring at the chart, and I'm like, all right, so you have a repetition of LSPYs, 1, 2, 3 right here, with the 2 and the 3 kind of coming up and pushing resistance, which is strange. Usually that doesn't happen unless it's distributive and it's about to dump really, really, really hard, like there's a key event about to happen, because that usually means you're getting ready to break through the range downward. But strangely, there's actually a higher lows being made as well. Now, one might look at this and suggest that if you flip the chart, that this could be like some kind of inverted SOS, and it's about to fail the other way. But the strange thing is, again, we never hit this target. And when I did the trajectories this morning, you got to just kind of see it to believe it, because it doesn't really make sense to suggest that this has this kind of a move all of a sudden, like almost out of nowhere, unless you just see it. And I went back and I was like, it can't be, right? Like, can't still be targeting that. And I did this triangulation. This is the drop zone level. So I'm telling you how I got there and what prompted me to look. And once I looked, you're going to be like, oh, I see why you're thinking this could be a big deal. The base here was 324 when it dropped, and it never came back and retested 324 ever. It hooked underneath 308, okay? Pretend this is any other chart. If you don't like Tesla, I don't really care. The point is that what that typically signifies is that you have a ledge here that needs to be retested. This is usually like a liquidity shelf. The market retreated away from it. There is no hook. There's no spike back up. Like it bleeds right through it, never touches it again. I triangulated that with the outermost creek here, which also hasn't been checked since February 4th. Oddly, February 4th, like the very end of January, is, if you look back at the markets, it's really like where the major markets kind of start their big meltdown. There's like a hook that happened right here on February 4th. And a lot of the stocks, not all of them, but a lot of the stocks have some pretty clear evidence that this is where a lot of that is lost. You can see like almost like a head and shoulder rising. And then this all of a sudden just starts this massive downward tear where it had been kind of consolidating weekly. And I'm looking at this like, all right, so you've got this historic drop point that happened at 420. Then you've got a ledge that dropped at 324. When you triangulate those, it comes out to Thursday, which is tomorrow, which is ridiculous. That's why I said hopium overload, because I don't think a lot of people are going to believe this, and I don't think it's going to happen. In some ways, I'm like, there's no way this is going to happen, right? Can't happen, right? Unless there's some kind of a catalyst news event. The only thing I know is the FOMC minutes are coming out in about 45 minutes. That's the only thing I can see. And unless they're talking about rate cuts, bringing them on early or something like that, I cannot understand. I could not imagine what that could possibly do as a catalyst. I just can't think what it could do. I have no idea. But I'm looking at this and I'm like, I do see that this is not just a one-off thing. So not only was it targeting in the triangulation roughly today into tomorrow, but then I'm looking at like, where do these tops and these cross downs, these are cross downs that would be like bullish anticipation trying to go a certain direction. This is then an oppressive kind of a creek where if the creek were to break, you can think of it like the slingshot or the bow and arrow, because if the creek were to break here, and it could already be happening right now, because remember, this broke out of the widening. It is a dangerous proposition to say this, I know. But if this is an oppressive creek that's really being forced downward on account of all the tariff news, the bad tariff news, and there's a sliver of good news, you guys are like, this is unusual, Booksy. You're usually all technical. I don't think this is a technical thing. I think there's some kind of a news event. I don't know exactly what it's going to be, but there's some kind of a news event that's going to prompt this. It may start with some technicals here, but there's going to be something. There's something odd going on when you have a pinpoint like that that's ongoing in a massive downward motion like this, which is iterating. I went to SPY and I thought, well, let me see if it's on the bigger index, and it is. And not only is it on the bigger index, but it's actually approaching, it's the 583 target, which I got before we dropped off the cliff, because I had posted it in our group that, man, that 583 target looks ripe. It looks like that's what they're aiming for. They didn't stop aiming for it. That big upthrust, this is what really tipped the scales here for me. The big upthrust that was like fake news that happened on Monday, when you do the wave interaction there, it's pointing to the same point that the previous ones were. And what that tells me is that if there's a news event that happens, that could potentially be the auto reaction point because of how extremely targeted it's being by bulls. Somebody back here, again, going back to these February 24th levels into March, early March levels, where that drop happened, somebody's looking at that and they're saying, that's the big check that we forgot to do. We didn't make it. Now, I'm not going to say it's going to necessarily get there. That would actually be kind of a little bit of a breakout for SPY. Potentially, it looks like it's going right now. But some kind of a news event, that was the 90-day pause thing that was fake, right? I looked at AMC. Does AMC also have these trajectories? Yes, it does. So this is then, I was like, holy crap. So this is not like a one-off thing. Every stock that I have on my list has trajectories going back to the February 24th date. They all have the same trajectories, but this is a squeeze event because in the most common sense of the word, it's happening. Please don't be wrong about this, Booksy, because if you are, you're going to look like a complete and total idiot. I got to warn you, if it goes the other way, it's going to be really bad. So please be aware that every one of these has particularly low targets if they drop. So it's not a guaranteed play. Please understand that, okay? But I'm telling you, something strange in the water when that bounce happened yesterday. And I said, it doesn't quite look bearish. It kind of looks a little bit bullish, but almost like a really weak bullish bottom because of the nature of the moves. They're very U-shaped, but it's strange how it's still like checking the boxes of an accumulation, like an accumulation would. And the volume is particularly high on this last bottom compared to the top that we made yesterday, which is also strange. Trump announces a 90-day pause on tariffs. That would probably make it go. Did that just happen? Or are you just saying that? Because if that just happened, you guys, I'm going to lose my mind. Because I don't think that just happened. Don't say that kind of stuff unless if you're just suggesting it. That's a good suggestion. Now? What do you mean now? You mean it happened? Are you joking? I mean, are you really I can't tell you right now. I'm trying to be really serious about this. Are you kidding me? What? What? Are you serious? Are you serious? It happening. It just happened? Nah, we got to make sure it's real, though. This happened over here, and it was bad. No joke. Holy crap. I checked, and I cannot confirm it. I'm looking at the Associated Press, and I can't see it. It did. It would be like breaking news, right? Am I ever going to see it? I can't find it. I'm looking, but I'm not seeing it. I'm seeing AP, and it's not there. I'm not seeing anything. Zero Hedge says it. On X? Did he actually just say it? Look at the market. What? 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 No. He said it? Did I just call a market squeeze before it happened? They're lying. Did I really do that? Oh my gosh. I posted it on the Discord group this morning. I had to go to my meeting, and I said yesterday, something's going to happen at noon today. I don't know what it is exactly, but something's going to happen at noon today. And I had it marked off on my charts that something was going to happen at noon today. And that this target, which is absurdly high, you guys, what just happened? All right, you need to understand something though. So let's chill it out a little bit, because you guys are like, you can't read minds, Booksy. No, I cannot. But I got to tell you right now, be really careful, because I think when it hits these levels, it's going to go kaput, meaning it's not going to look right. If the market can catch up to itself, it might look really, really good. But I got to be honest with you. I'm thinking this is probably going to be a big pump, and then it's going to chill pretty hard. We may come back down again. I don't think the market's done. We need to have what's called 6%. We need to have what's called a fool's rally, right? We have to. So in order to kind of enlist buyers, we have to have that. My SPY calls for April 14th are going nowhere. For some reason, they are at 0. I don't understand. I think people just don't realize what's going on. You guys, I bought calls this morning. I bought 583 calls this morning on SPY for April 14th, which is the stupidest thing I've ever done. But if they go, they're going to go hard. Why are there so many bids for a penny? Probably nobody wants them. Nobody believes the market move. You're right. I agree. IV is cranked. Yeah. But I bought them for 5 cents. It's not like I was buying like $20 calls or something. This is ridiculous. I'm kind of angry, actually. I'm kind of pissed off. Let's not get ahead of ourselves. This kind of crap has happened before, and like I get really excited and then it dumps, you know. But we did just make a higher push here on Tesla. That's a lot of volume. Everything's cranking. A little bit. Green, 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 green. Wolf's up 10%. Tesla's up 11%. Sweet Lord. I think I just saved my life. Well, I didn't do it. But you know what I mean. We'll see. Because if the market doesn't believe it, they're not going to raise the bid and the ask anyways. It's not really moving very far. They're up like 30, 40%. The SPY calls are nowhere, which really ticks me off. This doesn't make any sense to me. Somebody's just throwing a penny at the bid. What is going on, dude? If the market's really going to squeeze, there's no reason these shouldn't be like moving. I hate this stock market right now. I cannot stand this market right now. How is it not possible? How is it possible? I just got to be patient. I swear to you guys, it really isn't budging. Oh my gosh. How could I possibly have called something like this out, bought in, and then still not made a profit? The market is so jacked up right now. Yeah, that's great. I'm happy for you, man. But I don't know what mine are not doing anything. I'm like rage quitting right now because I'm so upset. I guess I'll have to just wait and see. I don't know why they wouldn't be moving at all. 6% up and they're down. Which tells me this is bad again. Because this is what happened the other day when it spiked and then it dumped. It went up and my calls went the opposite direction. Let's see. I'm looking at these percentages. 4%, 5%, 9%, 39%, 8%, 12%, 6%, 4%, 10%, 9%. Everything is up except my SPY call, which is down 81%. What the fudge? What? What? Oh my gosh. Okay. Don't worry, I'm not going to cry. I'm just extremely flustered right now. I don't know what's going on and why they're not moving. They're for April 14th. They're for like Monday. It's breaking out. This is just the start of AMC. So the AMC target, let's kind of go through these real quick. The AMC target for tomorrow at around 13:30 or what's like 1:30 or something like that in the afternoon, maybe 2, basically by end of day, roughly afternoon. It's $3.30. It's not ridiculously high. Now there is a chance that this still continues and goes up pretty far to like near 4, which is really where those levels are. It's Fidelity, but they're just not moving. And I'm refreshing constantly. It's not working. For SPY, it's 583, which seems really high to me, but there's other possibilities for SPY. There's a rejection that's possible right here at 538, right where that gap fill is. I didn't do FANG, did AMC. GME is kind of weird. Yeah, I called it. I needed to make money because I lost money. I need to make money back. GME is kind of weird because I don't think it's that high. I think it's 2673. I think it's right in the middle of that gap that was made. The reason for that is because, again, I went back and I looked at this, and some of the earliest markers here were probably for earnings because that 28, 29 level that I had was already hit. So they had to look for like the secondary trends on the Caddier breakdowns, and I did find them, and they point to 2680. I think GME front run the market this time. I think that buy-in caused it to kind of kickstart early. So it may go way farther. The most likely course of action is it's probably going to stop at around 27 for GME, which is not that high. But you got to understand, like GME already had a pump and then a second pump, had a pump and a dump and a second pump. It's kind of been doing its own thing. So the targets are a little lower. I think it actually ran ahead of the market. I don't think it's market manipulation if it has to do with policy. Policy is a different kind of thing, you know. No, the notes are coming out in about 30 minutes, so we might get a double whammy. But yeah, genuinely look back and see where that February 24th date is, right around that point. There's a drop that happens going into March. But usually most stocks have like a build out that started. There's a build out and a drop. And the build out and the drop kind of match. In some cases, they're a little off, but in most cases, they kind of match. That's your target. So again, if you don't know, and I don't have your ticker on the screen, it's this area from, again, about February 24th through about March 3rd. Almost every stock is the same. You know what I said too? Is I said it had to be a news event. I said this is not going to happen if it's not a news event. This is going to end up being a low pivot because that's what happens if there's nothing there and the bulls don't take it. It ends up being like a bottom, and then there's a big wave pivot around that point. So then the next wave pivot would have put us out May 30th. But I said it on the Discord, and I said it when I first got on here. I don't think it's going to happen unless there's some news drop. It's up 953. Wow. Yeah. I mean, I don't know what else to say. What do you guys want me to say? I can do some more analysis on some other stuff, but like I said, I think everything is pretty much the same. I guess the news event was a tariff pause to negotiate. I don't know. It just kind of clicked this morning. I don't know what it was. It was like I knew that there was something off about the chart back then. And I guess all of a sudden, like I noticed on Tesla, and I was like, wait a minute. Like everything is still pointing back to that day as if bulls have been waiting for an excuse. We've just been iterating, which is like a repetition of the same thing. You just keep doing the same sell down over and over again. And what usually happens is that eventually, if the bulls get some news that they want, it'll capitulate the other way. Like, you know, not in a bad way, but like it'll just melt. It doesn't happen that often in the market. But that should be like a truer auto reaction on this massive dump that we've had. Let's go ahead and look at S&P 500 for a bit, since that's a big one, and it obviously is a good barometer for the market. I don't know what news event it was going to be. It had to be something, but it was there, I guess. So I'm going to go back to that March 4th date. So obviously that would be like a full retracement back to that if it went back to that. February 23rd through March 4th. But let's just look at the fibs between there and here, the bottom. It looks like right around 545 is the 618. That usually causes some stumbling. And then the next levels are actually already built in here. The top from April 2nd, which is 566, is the 854. Now let's go to the very tip top here, way back to February, right around the 4th. Well, actually, this went on for a while, didn't it? We'll go back to February around Valentine's Day. Yep, the 618, same spot. It's at 560s. And then it looks like the 786 retracement is right where we see it. That's probably what that is. Then if it goes to 786 retracement, and again, this is still a bearish market. Don't hear me wrong, because that reaction's big, but it's just a 786 retracement. That could easily be very bearish. A continuation can happen. So don't overthink it. If it gets there, great. That's wonderful. I'm just looking at the levels to just double check, but that is a 786. It's at 582.34, which is where the level is that the market's targeting. In fact, it's probably better than the one I have on the chart, so I'm going to put it on there. Fake out? We'll see. It might be. This particular big move would be a fake out. Yeah, it's called a sucker's rally or a fool's rally. People think that the market's turning around because of some massive move, but then they start buying back in thinking the bottom's in, and it's not in yet. So this is just a 20% move to the upside. I'm currently seeing nothing come to life, so I'm kind of miffed, but once again, jeez. Being a chartist and being a trader are two very different things. I'm sorry, guys. I'm trying not to be bummed out. This is a really cool event that's happening. We're watching it live. I kind of got the nick of time call out on it. So I'm not going to, I'll just stop. I'll stop updating you guys on my position because you probably don't care that much anyways. So I'm going to just focus on the chart. And if you guys are making some money on it, the only advice I can give you is probably like where the 50% marker is on this move, because at this point, if you go up, and we're there right now, which makes sense. It's probably why we're hesitating a little bit. When you go into these moves with an S-curve, there's almost always like a 50% marker where people are going to take some profits on like the initial move. And that's usually where we see the S-curve form. This would have to be really extremely tight though, like almost parabolic. So I'm not sure how long you would say it supposedly lasts, but it is right here. Like it's right at 529. So the market's kind of hanging out about 50%. It might be different for some others, because if this is only 50% for Tesla, then it only comes back to 289, which is still pretty high. We really just have barely made a push here. So if this is a fake out for the bear market, you would see it reverse and slide back through 230. But if it's a bullish breakout, there should be a new creek to hit from the previous two tops that we made here, because there was a downward trend on these tops. So you'd have to see it like hold support on these downward pushes. I'm not seeing anything right now. This chart's there's not enough information because it's moving so fast. I have to go to like 1 minute or something. Yeah, so you got a high volume buy in here, lower volume as it goes towards the top. So you're going to get a backup. An S-curve would probably have a similar motion here of like dropping volume in the middle. It has to. You wouldn't have probably will have like a pretty big resting spot pretty soon anyways. As we had talked about this coming up to 261 and it hit like 256. So the breakout there is substantial, but it's not really quite done yet. We really have to see it come back up over. I'm looking at a 50-50 right now on this particular move. Not 1,000% sure where that is, but just kind of throwing it on top of the creek, and it looks like 270, which is the gap fill. So that might be, again, like just kind of a first leg here if it can hold this level. So SPY's in the same predicament. It needs to like hold on. It's like dear life. If the market wants to do a real rally here and like squeeze, it's got to eradicate all the shorts from the bottom, which means it needs to find support now. This is actually a little different because this didn't make a higher high push early. It made a higher high push later, which is a bit backwards. So I'm not so sure what to make of that on the S&P. Yeah, I mean, it's an ETF, so I don't know. Maybe it won't be that big of a deal, but in reality, even if there's a lot of profit takers here, I mean, this could come all the way back down to 510 for a buyback in after the news event. But if it's a squeeze, they won't bring it down low. They'll just, like, they won't let people out because they want to use the shorts to help drive the price. So they want the extra buying pressure. So some smart money somewhere will step in and buy it back up. The acceleration, I wasn't really tracking it beyond the markers that I already made, but we could track it farther if we want. See, this looks off right here because I did it on a different time frame. But let me see if I can fix it. This suggests Friday. The other suggested Thursday. It's like a window. But on the other time frame, the higher time frame, it was certainly straight, like just dead on. So here's what we need to watch out for. We need to watch out for a market-wide hook, which is where we are now. So you can see that there was a build out, and it looks like it's that's going to sort of stop it from moving it forward. That doesn't even go to a target this week. It goes to 600 over here on April 14th or something. But, and again, you got to look at this and think like that's not necessarily what's going on. That could just be a cross trend here that needs to be jumped. So this was the last one. This is a cat ear. Yeah, this is a totally perfect setup for a a jump here in a 50-50. So the slingshot would go right above, it'd go from probably this low to right above here, and there's 578. And then if it took a little bit longer, it's 583 by Thursday. That's assuming it doesn't have like a major pullback in the works. A major pullback, again, it could come pretty low, and technically it's still a breakout because it jumped over the creek and it advanced. So if it's an SOS with a backup, it's probably going to back up to like 510. It'd be an opportunity maybe to buy back in, risk on, but I kind of don't want that to happen, to be honest. I kind of want it to just go and short squeeze. So yeah, they released the minutes, though, and that's what I've heard, so we'll see. You have to understand, this is not enough of a real fake out for the market. Like, this little pump right here is nothing. You guys are like, it's not nothing, it's 7%. It's still nothing. We need to see, on like the 4-hour time frame on AMC, we need to see the on-balance volume like hike. Remember? And like we need to see it like go way up. I'm looking at minimum like 37, but I'm thinking like it should be pumping pretty far. Like high volatility here, high volatility again, maybe even going into the week of the 29th, but it should be going way up. Like I'm really concerned about unbalanced volume above all else, weirdly enough. I know it's not the thing is like if it's a squeeze event, I got to just say it. If it's a squeeze event, it's not going to have good volume, especially in the beginning. It's going to look kind of crappy because it looks like it's not a real bull move because it's not necessarily a real bull move. A lot of that is just shorts covering from over here on that walk down that was made to 506 from like 525. The market on the whole, yeah, I mean, the market on the whole is kind of doing the same thing. So there was a lot, except for GME, which already had kind of ran up. That was another piece of evidence here that I thought about this morning. There was something about this move on GME that I was like, it kind of looks like it just went early because I'm seeing a lot of continuity across the market, and it just looks like GME had a little bit of a reason to run early with some news. That was another piece of evidence. I don't know, it's kind of black swanny in some ways because I don't know if you could have, this is not something that could be replicated, right? Like, it's not like, oh, this is all you have to look out for. Like, it had to be this at this time because of that news that happened and that early pump. I was like, that's really odd. GME was green while the rest of the market was not for days. And I thought that was very strange. Almost like, again, like the market just wanted a reason to pump. Oh, FANG is up 9%. NU's up 5%. Wolf is up 12%. MPW's up 6%. SPY is up 6.6%. On the 3-minute chart, definitely overcooked. I'm very doubtful it matters on any other chart right now. We can check the hour. It's not even remotely overbought yet. It's kind of in the middle. It would make sense here to have the pullback if you're just looking for evidence of some kind of a drawback down. Even in the midst of a squeeze, you still probably have stuff like that happen. I mean, we know that that happens. You could have a really nasty sell down really fast. But this is what I would expect if it popped over just from the 1-hour chart. The drive up above and then back down again could be around to the 50, and then you would like take off. It's not a permanent solution, right? No matter what. So if a market squeeze happens, great, but I don't think it's a long-term I just don't think it is. I think you're looking at longer term recovery. So if you're in a trade, I can't tell you what to do with your money. You know I can't. But if you are in a trade here and you're making good money, you should already be thinking about that level that I mentioned. That's kind of like the penultimate, I think, for most charts. Anything beyond that on all these charts is like a more than just a hook. Like it's more than a hook, it would be like a breakout. So right now, that just signifies like a probable place of contention or termination, I should say, end result, if it goes to the extreme. So again, look back at that February 24th to March 3rd area. If they mention adding rate cuts, it's going to go. Unbelievable. I need a lot more because my SPY calls apparently don't want to move on a 7% move, which is ridiculous. Like who's selling at the level that they were basically asking for early this morning? That doesn't make any sense. Yeah. If the Fed says in their minutes that the Booksy, the 90-day tariff pause is only for countries who did not retaliate, so that doesn't include the EU who retaliated this morning and China, amongst others. Well, that makes sense. Still, it's time, which gives people an opportunity to go back up and get out of bad positions. You need to, like, I'm trying to tell you guys, like, I don't think this is a permanent upside move. I think it's just a massive auto reaction that has been waiting to happen. And I think they've been waiting for some kind of a news to prop it up so that we can go and get the squeeze back. I don't think it's permanent. So I think we're going to come up and like redistribute back at the top or at that March 4th. Again, February 24th to March 4th. Those are the key levels. Pretty much every chart was the same. Just take a minute to breathe. What's the benefit of having all this crap on the chart, Booksy, if it doesn't work? I don't know. I'm trying to just kind of... Yeah, I agree. I think it's an exit ramp. There's people who were hurting and they didn't get out of positions. They got stuck because they were thinking that there was a lot of people back here that just didn't get the opportunity to sell from April 2nd. There were a lot of people who thought that Trump wasn't going to do something like he did, which was tariffs based on trade deficits, not based on actual tariffs, which is strange to me. Because when you say reciprocal tariffs and then you go and you do it based on trade deficits, that's what caused the massive sell down. People were like, whoa, that's like way more than expected. That's what I was saying, we'd already priced in like some drop here, some pretty extreme drop here, going back just to April 2nd. But I think there was a lot of people, when this propped up, I don't think it was definitively bearish. And I look back on it and I'm like, yeah, I don't think that was particularly bearish at first. There was certainly an option there to go south, but once that news hit and the market just capitulated, like just dumped, I think people are waiting for an opportunity, and I think they're going to use this squeeze to kind of get back to the levels that they were at the beginning of the year, February, which is where the major drawdown began happening for most stocks in the market. So I don't think it's a bull market shift. They're going to talk about rallies. They're going to talk about saving the market, yada yada yada. Like none of this saves the market if it gets as high as it gets. Unreal. Tesla's up 16%. SPY's up 7.3%. FANG's up not like 11%, which is kind of surprising because there was like really bad oil news. Everything's kind of popping, but I'm just looking at it, guys. Everything's the same. Go back to those dates that I was talking about. It really isn't particularly surprising here. MPW is a little different. This one didn't ever come back and check this trend, so it would make sense to come back up to 622 or basically the April 2nd date and a little beyond. What a call out, man. I know some of you guys won't like it, but I do want to say that like my wife and I were like sitting together this morning and she prayed for me because I've been really struggling with the stock market situation. And she was really encouraging to me this morning, and it made me get back on my computer and like try to look at it from a different perspective. I just flipped the chart upside down. Sounds cliche. So as much as I'd love to say like, oh yeah, I found this thing, I certainly pointed it out before it happened, but I think my wife, especially with that encouragement and the prayer, really helped this morning for me, like emotionally and just in terms of like keeping my head straight. AMC is pushing. It's up to 285. The intersection's at 330. I don't think it necessarily has to be over then. I think you could have like extended moves, and I do think that AMC is poised to potentially move up again. Now I know some of you guys don't share the same beliefs. I'm trying to be respectful of that. But I need to just be true to myself when I say like I don't really want to puff myself up over it, So I got to be careful. Because I know that I was not feeling it yesterday. I was pretty down in the dumps yesterday. And I was thinking to myself, man, like, market doesn't make sense, I don't know how to deal with it. Like we went through it yesterday too, and I was pretty level-headed about it. I said I think SPY is going to react back up. But then it wasn't until this morning when I looked at it again that I was like, there could be like a squeeze event going into tomorrow, which is kind of insane. But it's like a Band-Aid on a gaping wound, okay? I don't really think that I still can't get these calls to move. But I don't think that there's a clean-cut answer. Other than I think this is probably just temporary. Still, hard to complain about 20% squeeze right here on Tesla. Very hard to complain about that. It's 17.8% right now. Just remember, whatever she gives back, she can take it away pretty quick. Finally. Oh, they moved 1 penny. Hooray. People are believing. Believe. I'm going to get rid of some of these This is crazy, dude. I bought 34 contracts of Tesla this morning. And they're just barely up. I mean, I guess they're up a lot technically, but I don't know what I'm complaining about. But it's just not like what I would expect for this kind of move. Oh well, you take what you get. They really need to do enough to convince people that it's running. So if you don't see those contracts, in my opinion, this is just me with behavior theory, I guess, ideas about the market. I think if you don't see the buy-in, if you don't see the convinced public, I don't think it's gone far enough. Just like they have to convince people to sell when it drops really, really hard, they have to convince people to buy when it pumps really, really hard. So we're talking about some pretty massive, massive moves that need to happen. It has to be a rally that people think is going to turn things back around, you know. And I don't know what's going to happen tomorrow at noon, but I'd say if it's not there by then, I'm probably not going to hold on to too much hope. This is a very short moment. We're talking about a 2-day rally, maybe. And then I think there's probably going to be something about Friday. And maybe that's part of it. But I honestly think that whoever is trying to get out of their positions in this is probably going to get out of their positions tomorrow before Friday. And then I would not expect Friday to hold up as well, personally. So I plan on being pretty bearish come tomorrow. If we don't see certain things, I'm definitely not going to feel it. Man, Fang is just on a tear. And man, what the heck? That ended up going like right down to that intersection. It was so perfect. This was already on the chart, and I thought that might be where it goes, but I bought at 125 or 121 or something like that. I bought some just some shares only, since it's not whatever. Not really been very beneficial for my contracts, so yep. For the first time in ages. It's because I'm loser. No, it's because AMC's been garbage. I get it. And also some of the stuff I thought might happen did not happen. So yeah. So I get it. I get why people haven't been around for a while. But it's a strange thing because I needed to go somewhere this morning, and I knew that I don't want to keep repeating the same thing. But if you're just joining, I just had to post it. It was like one of those weird like moments of, this is so dumb. I don't know how this could happen, but it's there. And I even said that. I was like, you have to just see it to believe what I'm talking about, because it's just there. Like, I don't know exactly why it's there. It's just there. And I was like, there's no way this is going to happen unless you get some kind of news. So that was a really big deal. There was some evidence. I don't want to make it sound like all's bad, but I don't know if you guys saw a lot of the headlines, but a lot of the headlines yesterday were pretty demoralizing. They were basically like, stocks give back their entire rally on like tariff news and stuff. It's like, well, yes and no. The rally itself was strangely bullish for some charts. It didn't really look ultra bearish. Like I had 2 targets set up a couple days ago. One was around that 250 to break out. And I thought we would just go up and break out, not turn around. And then my second target was 219. And I put 219 in the Discord group, for example, on Tesla, is what I'm talking about. And I was like, it probably goes one way or the other. We went like both ways. Kind of went It was like I said, it was like a Frankenstein move because it went up to the top and then back down. But I did say it kind of looks like a bottom. It looks like that classic M shape that you get when you're going to take off. So it's not like there wasn't any indication that this could be bullish. Weirdly, though, a lot of stocks, including I think the S&P 500, they did go lower. I think they went lower than the previous low. Some of them did in pre-market hours and after hours. Don't think that Tesla did. I could be wrong. But it didn't look good. And then futures went red. And then somebody yesterday said that the VIX was looking really bullish because it had a divergence on it. So whoever said that also had a pretty good call out there because they were saying it looked pretty divergent. But the overall move here, really the speculative nature of it was just about waveform theory and trajectories and like why that would happen the way that it happened. So it's a little bit of a hodgepodge, but TA definitely was a good help here. Now, where we are right now, and I'll kind of defer to SPY as like kind of a basic interactor instead of Tesla, because I know some people are like really not a fan of Tesla right now. But that ledge that we're kind of approaching, we just wicked to it. That is really the main resistance here. There's like a zone. It's a sticky zone, as I call it. There's 3 resistances here from different times, and they go from 380 up to, 538 up to 545. That's kind of what I would call like a sticky zone, meaning that there's definitely a possibility that you get kind of hung up here, and you could even, again, because we just bonked our heads on it, instigate a sell-off. You'd have to kind of watch that and just monitor, see if it has a retracement. I'm not going to do like fib retracements for everything, but it could come down pretty low. I mean, really, sincerely, if this is an SOS and it did break down, it could come all the way back to like 512, and that would still be a reasonable backup. Seems really far, but it's not that far. It's like it's back to the creek levels. So just, again, mitigating expectations there, just so you're aware of like what's possible. We are getting a little bit of a drawback on some, nothing huge. Whoa. Yeah, thanks, Manny's. Can you tell me when AMC is going to run? I think this is not the end of, again, the idea of this is to get buy-in. So you need to see some kind of an actual like major break moment. So what just happened on AMC is that it did jump the creek. Now this is really important because if it's going to have a fake out, it has to look like something big is happening. So it has to look like a huge breakout is occurring for sure. Your eyes are like probably like, why can't it just be a big breakout? It's not impossible, and we've talked about this before, that there's what's called an LPS, which is a last point of supply. If the buyers can't, and this is, I'm genuinely being serious when I say buyers, if the buyers can't get enough sellers to drive the price backwards, meaning they can't get enough people in here that they would consider to be dumb money who are going to sell on fear, and they can't drive the price back down, you would see what's called an LPS on the big picture, which is this never makes another low. It seems very unlikely to me that happens. I've said this before. There's a huge amount of evidence that suggests that a strike at 335 and or up here around 380, possibly extending up to the 4s, doesn't have to, possibly extending up to the 4s, but definitely up here around 370s, that would maybe be enough. I think if we saw that break, a lot of people might be convinced that this thing is running and start trying to buy in. But it has to look really good. And when I say that, I also think that it's going to correlate to the market condition. Because if people think that the broader market is running and it just keeps pumping, and they see AMC's pumping, they're going to assume that AMC is going to go with it. And that's what happened in the 2020 setup. The broader market took off in September and started making an SOS. AMC went down. it hit a low, but then it has this huge swelling of volume in this final like bounce. Massive OBV increase. Like it went higher than the whole range. And then it dumps lower than the whole range and resets back to a previous level, which I think that level is back here around December. These levels that were established, they were basically in September 2023 and December 2023. When you look at on balance volume, you can see those levels were reflected again on this blue trend that I have going down. That's what they've been aiming for. They're trying to reset that OBV and finish their accumulation by resetting it. In order to do that, most of the time, okay, not all the time, but most of the time, you have to have an upthrust that can get you down to those levels. We had one earlier, but I've been kind of jumping back and forth on it, but I do think that it's not enough. I've kind of been like that way for a while now, for the last few months. I don't think that back in December, that pump was enough. It did not surge above the top really, and it ultimately doesn't look like what I would have expected here from an actual, I mean, it's a hook, don't get me wrong, and it does have a big sell-off afterwards, but it's lacking in certain features that I just don't know, right? Where are they? They're not there. This breakout going back towards the fours, and it may even go way higher than expected, which this is what happened back here. It went higher than I would have expected on a fake out, right? It may go higher than expected, but really there's so many intersections right here around $4. I think if it breaks above that and it appears to hold and they do some convincing there, they walk it into a potential rug pull around earnings. And I think you're going to see that happen, and then there's going to be a massive dump. So my expectation has largely been that there's going to be a big pump here. It's a fool's rally. It's going to make people think it's running really hard. It's going to look like it's kind of balancing out. The rest of the market's going to be still going, like to some degree, you know, up into May or whatever. It's going to look a lot healthier than AMC maybe. And people are going to say it's lagging, and there's going to be something that drops it. And all I can see right now is earnings, but maybe there's something else in the works. That would be sufficient. You have to go up hard before you go down for a spring. So no matter what happened here, my thought was if it springs, and there's a big if, because, you know, it could just not, and then I'd be wrong about a spring, okay? But if it springs, it's going to drive the price up and then plow it through the earth. That move that happens has to be convincing. It just does. This is close, but it ultimately didn't make it to the spring. Now that we're at another point of contention, my thought is that this is what they're going to use. If they want to spring, your bull operators, don't hear me wrong, these aren't bears, okay? These are bull operators who want to drive the price to these low levels, right? And get it down to at least that $2 pocket, because that would be a full reset. So if they can hike that OBV up as high as possible and then drive it down to that blue marker, that's where I think it takes off. And I think it recovers and then it just kind of goes. There's a longer winded version of this that takes a lot longer and doesn't break down until July. And I'm not going to get into that right this second, but I do need to tell you that there's two very distinct possibilities here. One is a squeeze starting in May, where this pump actually leads to a pretty massive dump right afterwards. It goes down pretty low to like 180s. And then May builds out and actually just squeezes like kind of what people are expecting. Okay? The similar timing as the second squeeze that happened in 2021. The alternative is a little more nefarious, and it has to do with like a continued iteration. Basically, like you do the same thing you did here, but you do it again off to the side, and you build out like it's going to go again. And I think this is possible. I think this longer term one is starting to make me feel a little bit more like, man, that might be more likely, because it would make it look like it's going to run up just like it did almost the same time last year, but they're really just holding on to those positions before like a final fake out and a dump. Like they're going back and resetting those positions and probably loading up on shorts. If it's, of course, we'll know if it's distribution at the time, we'll be able to tell to some degree. But it has to look like, again, this massive spike, oh, it's going to run in May, right? Everyone will say it's going to run in May. There's going to be a squeeze event. But then it does the opposite, and it actually takes a course south for about a month, which is a long time. But it literally goes from like May all the way down through July. So it's a long move, and it would suck. So that's the alternative. So one is very, very, very fast. One is kind of fast followed by a very slow repetition of this same exact thing. And it may be a little more elevated. It may not go down quite as far, but it would be that timing. Weirdly, the two models have roughly the same outcome, which is interesting to me because I did them based on two different setups. The timing of the exit was different by about 30 days, but the finishing was not different. The finishing was the same. I've said it before, I'll say it again. I don't think the market is predetermined on every outcome. I think it opens up doors and then it decides at that moment if it's going to take those doors based on the liquidity that's available. I don't think that is why I look at stuff like this and I'm trying to warn people like this may not happen the way you think it's going to happen because I saw something similar before going into April 2nd and that didn't happen. Right? So like, what's to say it couldn't do it again? Well, not much. There has to be something there. So yes, the setup is there, but does it get taken? That's another question. And that's why you use good buy and sell practices. That's the trading practice, not the charting practice. The charting practice just shows you some paths that are probable or not probable. And then the trading practice is you actively trading it, right? And you decide whether you want to do that or not. So there needs to be a real buy-in here off this top at like 250 on Tesla, for example, to really convince people this is going to go. And then it's got to go. It's going to follow through on it. We're going to mark up back through to the top. If you don't have that, then it's already a fake out. There's no follow through. Who cares, right? If you start sliding back through levels. So I'm looking at SPY right now. I'm like, yeah, it could come back low, I guess, to do a head fake. I don't think it's as likely because I think that a big part of the goal here would be to squeeze. And a squeeze is very simple in this case, which is just use what's available to you to get back to a particular level that you want to get back to, and maybe even beyond it. And what's available to you is a whole lot of short positions. People that are really banking on this thing going down again. Heavy in the puts, right? Heavy in the short positions. Because now they're convinced that the market's going to go lower. And they love the dangling carrot, man. I told people in the Discord group, and I don't think everybody agreed with me, and I think that's okay. I said, I don't think it's going to make new lows, and I don't think it's going to double bottom right now. I think it's going to stop around 250. And it went lower than 250, but it stopped around 250. And the reason for that is you don't you don't need to go down there. Like the liquidity need is not on the bear's part, it's on the bull part. And what they would be looking for is to convince people that they're going to go one direction in order to reverse it. They'd be looking for the squeeze. So they want people to get heavy into selling here, which they did, thinking it's going to go ahead and go to a new low, but that's the dangling carrot, right? I think SPY did the same thing with 450. 450 is the most preferred target that I've seen among analysts. And so you dangle the carrot and then you rug pull the other way so that you can get back up and offload and reload again. And then you probably head towards 450, right? Like it's not like a gone target. The same thing happened for AMC when we dropped down from our distribution a long time ago. We had that 250 target and it just kept dangling right above the $3 mark and never would break it. It went to like 350 in like extended hours or something. But eventually it does, and it's really violent and it's gross, right? It's still there. They're using that to try to like bait people into taking the trade. Take the trade down. It's going to keep going. This is bad news. So I'm not looking at any of this stuff right now as like it's definitely going to keep going. I think all of it is pretty much the same, which is it's all been this condensing into a few moments where you can have some good news. So bad news, bad news, bad news, bad news until, oh, now there's good news. We squeeze and we use that as an opportunity to reload, unload and reload. So I don't think it's going to just go, but are there ways to know if it's going? Sure. this to me was obviously when it happened, and the reason why I thought it was going to go to 14 back here in April last year was because it had a accumulation model set up. It looked really good versus the distribution, like the one just prior to it and the one prior to that. And when you see that happening, right, and it builds out and you're like, man, they haven't gone back and checked any of these levels, then you have a pretty decent probability, right? This is the same exact story, this walk down almost. You have a pretty good possibility it's going to squeeze back to the top. I think we're seeing that right now, presently, with these walk downs, like pretty good opportunity to squeeze back up to that top area on that walk down. Maybe even as high as that $5 drop, which would be insane, but I don't think you need it. So I'm going to go with the lower ball answers this time instead of the high ball answer like I did with the $8 call out. That did never happen. The big thing is OBV, guys. So if you have a 4-hour chart on AMC and you want to follow it, there's a cat ear breakdown that happened on the OBV. It's a little bit muddy, but there's two lines from that you should probably look at. One is around February 14th, the top. The other is around March 25th. You take those back to October 9th, because that was the bottom on this rotation. So this is a wave that started, dropped, and then would return back potentially. Remember, the wave never really finished. We had talked about that previously, like it looked like it was supposed to finish a lot sooner. But guess what? It might just finish on time if it gets up here, frankly, by tomorrow, because that is when it finishes. Like, that's the wraparound on that waveform. Weirdly enough, it's still there. It just seems super unlikely when you're down here and you're in the pits and you're like, it's not going to squeeze that far. There's no way. Well, guess what? If it goes up to 370 right now, checkbox, right? Like, that's exactly where that rotation works. I don't know if they were trying to just hold on and for dear life here until they could, but I mean, look at it. You can't make that up, right? I mean, it's right there. So that's where I would use the bottom here, though, because it's different on this chart. I want to see, ideally, that the price as it goes up to 360 or whatever, I really want to see it go beyond these on balance volume targets, but you could say 37.3, you could say 41.13 million on the 4-hour. The reason I'm not sure, because, and this is just part of it, is because there is another trend that they built out, and they might be using this as opposed to going down to that blue box zone that I have built, because there's another couple ledges here. I didn't mark them off on the chart, but one of them's at like 24.4 million. That's another possible ledge. I mean, it does go back to the same zone. There's like 3, 1, 2, 3. And I don't know which is going to be preferred, but I know it's going to be one of those 3. It will be, in my opinion, it will be, because it needs to be dropped back through to those levels that we were seeing back here in this particular range at the top. So again, there are a few zones that it could drop to. I think this is an SOW, like a weakness sign on the previous one, on this one. Some people are going to look at it and say, well, it could be a spring. Again, I don't see a big up thrust before it. I don't see it. This was super weak. So to me, I'm like, I don't see the spring action there. I see it as a phase B kind of deal. I think you take it up and drop it. So arguably, when you look at this from that perspective, we just have to kind of wait and see how far it goes on this push. And then that's what I'm saying. They may take it a lot farther if they need to. But yeah, I mean, in theory, is that enough? If it gets up to, let's say it gets up to $4, that'd be this one right here at 41 million. Is that enough to drop it back through and get back down to some low region? You know, yeah, I mean, 50-50 around that marker, you're probably going to come down to 22, cut it in half, right? That gets you below the red line pretty easily, which is really more like 24 on the dot, 24 million on the 4 hours. So in theory, it doesn't need to go maybe as high as I have it going. And that's why one of these I've got going up to like the blue You can see it right there, but it doesn't go all the way up to beyond the top, which is what happened in 2021 or 2020, 2021. It went over the top. Not the Stallone movie, but the price action. So is it possible that it just kind of stops short? Maybe it only goes up to like 45 million or just kind of breaches above this, like an upthrust? Sure. You could make a case that if this does take as long to get down here as I may suggest, especially on the second build out here, like going into July, yeah, I mean, when you get to July, look at where it is in July. July 1st, it's right at that 19.23 million, and it's a 50-50, up to the top. So is that possible? Sure. That's why I'm not like, I really can't tell you right this second without looking at the on-balance volume, because I think that the on-balance volume is more important than the price action right now. I think that the price action wants to be down in that $2 to $1.88 range, probably like the $2.26 to $1.88 range. That's where I think the bulls want to go to get that spring. That's evidenced by 100 different things, but that's a big piece of this. I don't think that the timing is 100% yet, and I don't think that I know exactly how it goes on this pump yet. But I think that you can go back and look at this chart and look at the on-balance volume and make a determination, right, to see if it gets there. Do I see an AMC going to 600? No. Not till like 2030 or something, if it does happen. Every time we have like big events in the market, we typically end up going back through the AMC chart. And I've already done it recently, and I'm telling you, like, the current build out isn't really great. If you look at the shift value, it doesn't seem to me that this would go beyond. Everything's in the right place. The timing's the same. I said February 2026, like 2 years ago now. It's been a long time, right? We started talking about it like way back here because there was a big S curve, right? But also timing again on the rotation can be tricky. We're seeing that right now. Like, it's happening right now. It's the same kind of concept that it could wait till the last possible second to go, but that's where it is. It's basically like end of February, March 2026. I think I've seen across the market that might be a pretty important zone in the market, and that we're probably going to have a pretty ugly 2026, unfortunately, as a result. But beyond that, I can't really see much farther. And honestly, if this were to go, it probably wouldn't break out until 2029. Just based on the way these have been going, you'd probably expect to see the same thing happen again below that marker. That's a really important zone for the stock. At first, it doesn't look like it's super important because of where it is. But if you account for the shifted values of this chart and the actual stock market kind of like it was anchored on the top for a reason, and it is an oddly low LSPY. Would have made a lot more sense to be up here. And I think what happened is when the Judge Zern thing, or when APE was created, that's when the shift started, and they dropped it really low. It would have made more sense to do it here, but they did it lower. And this ends up being this value from the bottom here in 2023 to that bottom on the original LSPY, which was in 2017. That ends up being the shift value mathematically. So it sounds weird, but I think the ultimate goal was to come back and retest this zone right here in terms of valuation. And I've been saying that for a little while now. Nothing's changed about that. I genuinely think that was it. It's close to the original opening value. Maybe it would have hit the original opening value at some point and all that. I don't know. But that's what I was thinking. But, the shift value has changed that, and I don't think it's necessarily going to go beyond it. And when I started looking at those gaps and the relationship between the gaps and the shift values, everything syncs up really, 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 really well for a move back to this gap that they made at 43. I do think it could go a little farther than that, maybe as high as 50 but I don't expect it. I'm not like guaranteeing that. I can't guarantee anything anyways. February 2026. This is not necessarily going to look exactly like the previous move. You might have something similar right up here. In fact, I would bet money on that because there's no there's no way to do this chart without that intersection being super critical right around August of this year, which is a weird time to think about a breakout. But that's the 2-year cycle here, August to August. And they've been using that August date quite a bit. Started in August 2022 to August 2023. And 2-year cycle to August 2025. I think that's where this thing has I think it has a melt up to that point. Again, it could start in July and be like a month-long melt up, but it's probably not going to stay there very long. So may look similar. I don't know. It may look similar at first to this, but I actually think the second move might look more like this. Might look more like the walk down that occurred from September 2023 down to April 2024, but in reverse and going up. And there's a lot of good reasons for that. Part of it has to do with the previous range and like walking back up through these levels. It's in the right spot for it. But another part of it has to do with rotational symmetry. And that time has to go somewhere. And the time is unaccounted for if you think it just goes straight up, straight up. And I'll tell you this, if it goes straight up, and you have like a double squeeze event, I don't know how that works, but if you have a 1-2 squeeze event it'd be crazy, but in like July and then again a month or so later, then I'm not going to say anything else, because what probably happens is that this looks like the market takes the full length of time, and AMC's already in a breakdown mode for 3 or 4 months before the market gets there. That happened in 2000. It's the same thing that happened in 2021. AMC squeezed, and then the market catches up and has a big fallout in January 2021 as AMC's already breaking down. It did its full distribution. So it was behind the market, and then it was ahead of the market. It was behind, and then it was front running. So if there is a double squeeze event, then I think that's it. And I'm not going to hold on to some kind of hopium that it's going to go up again. I think the market's going to cap off into next year again. And honestly, the way that things are going, I don't want to be like Mr. Crystal Ball here because it's way off in the future. But the way things are going right now, I'm starting to see the words between, like reading between the lines, kind of, so to speak. Because the way that our president, if you're a U.S. citizen, has talked about this whole transition, it's like 1 to 2 years. I don't think the first 2 years are going to look particularly great. And part of me thinks that they're going to do a full reset, like take it back up and then take it down again to where the election occurred here in 2024. That basically by 2026, we're going to be back to the same spot again that we are currently. But during that time, there's going to be like maybe even a little different, I guess, on different stocks. But during that time, there's going to be a huge amount of volatility and tribulation to bring the market up to redistribute. And it's going to be pretty ugly if that happens. I already talked about it on SPY. I did a full thing on SPY the other day too, but it'd be pretty ugly. So in the next couple of months, May, June might be a sleeper. I got to be honest. We'll see. There's a chance, if I'm wrong about the spring being later, I've got this idea that it could go down early in May. This is a little different, but what you could do is you could kind of reverse these. I hate the idea that this would be like perfectly symmetrical because it just seems too easy to me anyways. And it also doesn't make a lot of sense because we've spent so much time down here. I just don't know why you wouldn't just leave the range. You should be leaving and going back above 530 at the least. Like, it doesn't make any sense to me. That's the level that represents like the previous floor when you use the shift value chart. So I don't know why in the world, like right here, which is the previous bottom, it's like 1072. It's not actually 1072, but you get what I'm saying. That's where it should be we come back above there and like hold above this level, right? So it might go up to the middle of this zone and then come back down and chill out and then break out. That's basically exactly what happened here. Like it came back to that right underneath that LSPY level and then broke out. And we would see that if we were using the shift chart, we would see that like right here, right? When we drop it down, it should be above 5. So it's a little complicated, but it would be above that 539. So this doesn't seem very likely to me that you would just walk out in a symmetrical way that you did over here, but it's certainly not impossible, you know? And I think it would be silly to say that couldn't happen. I just don't give it a lot of thought right now. I've been trying to do other things and yeah, so I guess if it made kind of a mild spring and then walked out, it could be a squeeze in just January. That's what it looks like timing-wise. Just walk out up until January. Pretty slow-like because it would take as much time as this took. So, yeah. So you're leaving around May, and you would just kind of walk your way out. And you probably wouldn't leave $7 or something until January. That's kind of the backwards version of this. And that's pretty darn different, right? I mean, it is. That's essentially like a mirror. I don't think that's going to happen. I think you're going to get the first move is going to be big and the second move is going to be more relaxed. A walkout. Because I think it makes more sense at this point to trade this region here than it is to walk out again here. It doesn't really make sense to me to walk out here. Unless they're waiting, unless there's some news event, you know what I mean? Like, I just can't imagine why you would do that. The liquidity doesn't, you don't need it. It's that simple. Like, you've already spent over a year down here. Like, I just don't see why you'd need to spend another 3 or 4 months. It's kind of backwards. Whereas it does make sense to trade this in an M shape and kind of get back up because of the previous levels that have gone untested since 2020, some 5 years ago. It would make a lot more sense to me to kind of reconfirm those levels on the way out and use the rotational symmetry instead of the mirrored symmetry. That's the analysis part that requires a little bit of subjectivity in your discernment, because I could be wrong about that. It looks like SPY is up 8.25%. If it drops into May, the bottom will be at like 288. If it drops into July, it could be as low as like $2. Maybe some weird number like 192 or something, you know, I don't know. 226. So we had a couple people looking at am I predicting an AA tweet in May? Like I said, there's nothing like I could do about it. I came on the stream today. I'm not sitting here saying that it has to happen, but there's nothing I can do. All I can say is there will be some news if this pans out, which sounds a little bit silly. It's kind of like you're just kind of covering your own butt here, but there's nothing I can do about that. Like, I can't predict the future. I can't predict when Donald Trump tweets this or that, you know? But somebody out there has an idea, because this is evidence of it. It's like being a detective, I think, to some degree, or a private investigator or something. You're looking at the details here, and there's something interesting going on, and you're saying, look, this is ridiculous, but for whatever reason, this looks like it could happen. And somebody out there is expecting something right here because they were prepping for it down bottom. So that is all I could say. Period. You know, I cannot say that so-and-so is going to tweet. I would never do that. That would be silly. And you know that this is true if you followed me for a while. It's not like every single time these things have appeared, it's worked out. That's not the truth. They do not always work out. the at this point it should be pretty infamous that the call out to going up to like 860s or whatever didn't ever happen. And I've said it before and I'll say it again. It wasn't because the chart was wrong. It's because I was wrong about, what was needed for liquidity, and ultimately like nothing happened. Like no one showed up to buy that in and make it happen. And probably a lot of that has to do with the timing of who was elected and what was going on. And that's why I said the new model for AMC specifically is very spread out. I'm remeasuring things and I'm like, kind of looks like they're still delaying some stuff here. Like it was clearly a wait and see kind of mentality to some degree. I think they wanted to make sure, without getting too tinfoil hat, I think they wanted to make sure that everything else was in the right place when certain things happened. So I don't think that there's no crystal ball here, right? There's no like, it's got to do this, has to. No, it's not. But yeah, there is high probability sometimes when you see a lot of evidence. So we're at 264 on Tesla. It's looking okay. It's a weird day because you'd think I would be like super happy. Technically, my Tesla calls are up like ridiculously high, but they're up 200% from the bottom. But I'm still down because of the position that I had. I mean, I have some of those that are like really, really good, and then others that are like meh. They're not so good. They're not so good. And then those SPY calls, I'm just like flabbergasted. I said I wasn't going to talk about it, so I'm going to try not to, but I'm flabbergasted. They are not moving. There's a decent influx of volume, and open interest has gone up a bit, but it doesn't look like I'm going to get more than like a penny out of this, which sucks. Maybe tomorrow will be different. That's unbelievable, though. If I had just bought like one share, I would have been better off, which is silly. I guess that's what happens when the volatility is jacked up. Right, so this was the sticky zone for the S&P. So it got there pretty much on time. So the full length of this move, I've said it a couple times on stream, but if you're curious and you may not have been on earlier, almost everything, though it's not like 100%, but almost everything that I've looked at which is what almost everything means, because there's some that it's just a little weird. Like GME is a little weird. It looks like it went early and now it may not go as far. But almost everything is going back to this February 24th period through about March 5th. There's a lot of ways to interpret that because, as you all know, that there's more than one creek here. There's cross waves and other things like that. And you could look at this and suggest that, well, maybe it doesn't even go to that high. Maybe it only goes up to here, right? Because there's a cross right there, 1, 2. Yeah, it's possible, I don't want to make it seem like there has to be this perfect hit, but that is the zone. It looks like it might be low, like 564, if it does not go that far. But yeah, I mean, there's obviously like some minor differences here that you could kind of point out and say, well, maybe it's not going to go that high, maybe it goes this high. But the targets that were being targeted with trajectory information were all pointing back to that breakdown that happened, and I think it's really critical. So if there's no creek jump, it's kind of self-explanatory here on SPY, because if there's no creek jump, then it's probably going to stop right here at 560, which is that gap down, So do I think that the market has that as a possibility right now? For tomorrow, yes, totally. So if we don't see that bigger target, I wouldn't be crying about it. I would just be like, okay, well, the market didn't have enough oomph to get there. But the overall motion should be a pretty big rally up. And I was thinking that would be a halfway point. Let's try this as a halfway point. Yeah, they both kind of work because they're both sort of straddling those values. This might be a better halfway point from this breakout right here. It is. It's a bit stronger. So that suggests that SPY could find a nest here at 527. I've already got it marked off. But if it backs up to 527 and can hold, I think it has another push to 563. So that would be like the second movement. And that makes sense. Like I said, this is probably a little sticky right here. And it looks like they're gearing up for like a 50-50 through it. If it goes back down to 527. Yeah, unfortunately, the options chain is pretty much garbage right now, so I'm not really sure what to tell you about that. Unbelievably, the bid is the same as it was 7% ago, which is insane. Like under normal circumstances, this could have been like a 10,000% move. I mean, but the volatility was so high already, so... Well, originally, without the shift value, that same target region is like 90s. I mean, it's up here. But when you take into account the shift, it's like a 225% shift. It's 45 something. It's really just where that gap is. And if you look at this as just like a normal chart and you're not trying to do any kind of crazy wave analysis on it, that's just a floor right there at 36. So to retest that floor is a pretty simple like call out. Like you don't need to have any of this stuff on the chart to just see that's a floor that never got checked, to just drop through it. So coming back up to 36 makes sense. And then there's a gap right above. So you're like, well, it is kind of common sense, The 90 though was from the bigger wave. And I'm just not convinced anymore that it's going to actually do that. Because the more I stare at the chart and look at the comparison between what we have and what is there without that shift value, it just looks like everything was shifted down. And that makes me think that there's no reason to be hyper bullish about where it goes if it's shifting down. So again, like the original level that I was looking at was this 72 area, which is now where it looks like where we took off in May, and that LPS zone. And that it could go as high as, again, like 90, because that's the top of that range, like 96, which is pretty close to the original opening value that this had. But you take into consideration the shift value, and it really becomes more like 52. High, and that's also like a reasonable level. I mean, that is the level that we took off, we kind of fell from during the Judge Zern thing. It's right at the kind of the closing candle of that day, and then it also goes backwards to that opening candle low back in May of 2021. So it's not like this is some kind of like really irrelevant level. It's still a very important zone. In fact, I think you could argue pretty definitively that that's where the cat ear walked down. You can see right there, it held that support at 52, bounced off of it, and then walked through it and hooked on that. So to me, that's sort of like the penultimate level, and I don't know why you would break that right now. And when you look at that with the triangulation of the overall downtrend, it's like, yeah, it kind of makes sense. It's pretty much right where you would expect it to be in this zone. And then it just looks like a wave cross, which is totally normal, like a trend cross. Like it's just a trend rebounding to where it normally would go, right? So Tesla is almost up 20%. Pretty crazy. SPY is up quite a bit, 7.75. FANG, I've got 13%, looking pretty good. Just some of the ones I follow. MPW is at 535. It's kind of low compared to some, kind of modest. We got NU up at $8.53, or excuse me, 8.53%, excuse me. This triangulation actually makes a lot of sense. I talked about this before. It's like the same triangulation we looked at. It's just late. Once again, it's like going back to that March area and then February. You can see that the February 24th zone is like right there. And then the March zone is right there. It's already there. So it may be I don't know, maybe it breaks out, but I'd be a little bit concerned if it gets there too fast, because like some of the rest of the market hasn't gotten there. But maybe that means NU is going to go farther. You know, originally when I had drawn this out as a widening, thought it might come up to 12, and it still looks like that's possible. You can see it's still there. Like that widening 1, 2, like go start here, 1, 2, 3, 4, 5, and then back up. So maybe it gets there. I mean, it can go pretty far. I think this could go all the way up to 12. That's about the halfway point. Right here, right where it broke out today at 1060. So some stocks might outperform others, it seems, and head back up. Again, this is the drop-in level from February. It's the same, exactly the same. I just don't want to do the triangulation on every chart because it takes a little bit of time. GME is one of the weaker ones. I think, and like I said this earlier, I think it was already going, and that's what, we already got like a big precursor for the move. I don't see it necessarily going way beyond 27 right now. And if you recall, you may not, but if you recall, that's where that wave top is as well. So yeah, like there's a lot of question marks about where we go here, but ultimately like this is the triangulation right there previously. And that doesn't go much beyond 2750. So unless it can recapture like 28, I don't see it as a squeeze event right this second. Could it happen? Maybe. But I just would wait, you know? So I'm not seeing any inconsistency in these charts. This looks correct. This is the same or similar in terms of that move. It's the same triangulation. I have a little arrow pointing to it because what I suggested was that this is kind of the middle of a bigger cat ear and that you should see a secondary break, like an M shape here. So I had some other things on the chart, just kind of thinking about how it might move, but certainly if it comes back up, it's just coming back to the top of that wave. And this is like some crazy reaction from the Bitcoin news. So I don't think that we're out of the woods yet, is what I'm trying to say with something like GME. And if it breaks above, I'd have to kind of see what happens at like 28, 29. Otherwise, I think it's probably going to stop short this week at like 27.4. If there's some of these others in the market that are just going to be bigger movers because they just have more ground to cover. I mean, it's that simple. And if the goal is to kind of come back to certain levels, you don't need to go sky high on GME right now. Even if there was evidence it could be up to like 40, I can't stress that that's still there. It's just not, you know, I don't know. That's not a guarantee either. So I think we just kind of have to take what we get and be okay with it. Yeah, I'm thinking the goal here might not be to go much beyond 567. So if it does hit 580s, cool, but the goal may not be to actually let it sit very long, because this is like the midway on this downward motion. You might say it's a widening. I'm not really sure about that. It looks like a curved widening, like it's starting to curve out. But if it's kind of returned bearish, this is probably enough, 580. But I think the zone from 67 up to 580 would probably be like a distribution zone if that's the case. So you'd see it would get like overbought right up here and then start kind of chopping. You might get some more upside, but at the end of the day, that's probably where you're going to distribute if the bears want to take it right back. I don't think you're going to let it like rest for long up there. Why do I think it stops? Because there's a huge level right there from 40 to 50. Like a historic center point on the wave. It's a massive confirmed resistance and support level right here. Like this is where it took off in the May 2021 spring. And then it resets there and it does the cat ears through it right here for the greater part of like a year plus. It does a massive drop back down through it. So this is like a historically like super important level for AMC. And when you look at the overall trend and you look at the triangulation, that's where it would go. It's intersecting where we see the new triangulation between where the gap is and the Judge Zern decision area. That was back in August 2023, and where we intersect the prevailing downtrend, which is where this wave generates from. This wave is an up-down that's about 50-50 across a center wave right here, which is what we drop through. What's confusing is that there was a shift value of 226.36 or whatever it is percent that occurred. So we dropped really low instead of kind of staying up near an anchor to this bottom, so to speak. And that kind of finishes off this trend. Well, the breakout point is exactly where it needs to be on the 50% marker to this trend. And it intersects the downward creek that was generated for 3 years, which is super important. So it would make sense to do like a 50-50 around that. And that just so happens to also intersect the triangulation of the gap, this historically important level that we walked back through for like 2 years. More than that, if you consider it back to this point, the interactions there. And then ultimately, it's the wave that finishes right there. So if it doesn't get that high by that point, I don't know if it's ever going to get that high. You know what I mean? But why would I expect it to go beyond it? That's a good question. I don't have an answer. That I could answer I got like 30 answers or more. I mean, I can keep going. You can do fib retracements. You can do all kinds of stuff if you want. I'm going to guarantee you to some degree that this area from like 50, really it goes from like 36 up to 52, but it's this zone right here. That's the area that's in question. There's so many things. We dropped from it. We never tested it. It never got checked. We just kind of plowed right through that region of liquidity. I think a lot of that liquidity was grabbed during the ape stuff, and that's why they didn't go for it at all. They would want to probably offload shares through that region. But I just don't see why you would have any expectation that it would keep going. I think that's the bigger question here. And then I've looked at this motif for the greater part of like 2 years, and I don't think that I don't think this is anything new to anybody here, but I've looked at this quite a bit, and I'm telling you, like, this has been the motif that AMC has most commonly followed. Like, we just did it this entire last year. This is the same exact chart as the macro chart, and we've done this, like, I don't know, hundreds of times on the smaller scales. Maybe more like a half a dozen or more on, like, midterm, setups. But what needs to happen here, and this is just a Wyckoffean wave, essentially, it's not complicated. What needs to happen here is that what you see is that the cat ear is always in the middle on this like breakdown right here. And what you see is that this only ever almost guarantees like a return back to that level. And it's usually the horizontal that matters. So you'll have like a LSPY / preliminary support coming down, and then you'll stop there. You'll do your kitty cat ears, right? You'll generate a lot of points of interest. This is the 50-50 to the upside. It also wraps around like the middle. So you're just basically traveling through ranges. Ranges like 1 is right here. Ranges 2 is like up here. I mean, it's that simple, and actually probably smaller than that. So it's just a way of traversing like range. It's not complicated. And you're essentially doing a liquidity grab high and low. The goal of a spring is to go below what was considered low liquidity. That's why when I look at this, it doesn't really confuse me that we're this low, because I'm like, yeah, we're beneath that floor, but it makes a lot more sense when you look at the wave as it is without the shift value there, that 226%. It's actually nestled right underneath that bottom. It's just dipping below the bottom right there. It's not actually like super low. According to like the historical data, it's just right beneath this. And that makes sense to me. That's just a wave, up, down, up, you know? So you can use a wave rotation or a symmetry rotation on it if you want. That's what I've done. I usually do this because I see this as like an early SOW, because this could indicate where you could go into the future sometimes. That's why I do it that way. But you could look at this as just a macro wave that's going around and back up to get you back to the top on the 50-50 pull around. This is just a Wyckofian setup now. So what usually happens is that you're going to come to this top and reject. And the main reason for that is you've generated a new creek when you create these cat ears. If this creek breaks and there's no test, which is often the case, if this creek breaks and there's no test, you almost always have to come back and check it. And based on the way things are right now, like I don't know why you wouldn't come all the way back down and retest it. It just makes sense. Like, and we've seen enough of these on the chart to know that this is the most common way that this happens. And even goes beyond it sometimes. It can go really low if that creek needs to check really low. Then when the breakout might happen is here, and this is when you might get a offset of the original 50-50 beyond what you were just expecting, depending on how it was set up. Especially if this came down really low, you might start from like a lower point and never make it back to the all-time high. But if you start from roughly the bottom or even a little bit higher, it changes things, and you can see pretty obviously why that would be the case. This is now a breakout above the middle, and it completes the wave, and then you're also in the position where you're back to all-time highs. And you can go retest the all-time highs if you want to. The problem is that there's nowhere anywhere in the market that guarantees that that's actually the way this happens, because, and if you got to hear me out on this, because if you develop what's called an SOW down here, a weakness, the remaining action could be quite significantly different than what you expect. It could be quite low. And we have seen times where this never really ever completes, where what happens is that essentially it just iterates, forms a new thing, and then you get something called a cat ear, which is where you get the cat ear formation down. This is not separate from anything else I've done on this channel ever. It's 100% logic based on what we've seen. That's why I've talked about, when I say levels sometimes, and I'm like, it really can't hook beneath this level, I'm usually looking backward at that original 50% marker, or if it's lower, it could be down here. I mean, it doesn't have to be directly in the middle, but that's always where that ice breaks down, right? You get like a parallel here, and then the ice will break down. And this is what we would call an LSPY with a breakdown and a UTAD, which is up thrust after distribution down, depending on what happens down bottom. If it's bullish down bottom and you get a bullish range down bottom, then this may not occur, and you would get the break back up to retest the all-time highs. But one thing that's always there is that this is still just like a small wave cross, because in the midst of all this, as much as I'd love to say like it's definitely going to go all the way up to XYZ, in the midst of all this, you have what's called a shrinking iterative model, which is that this motion right here, and we've been watching it on AMC. This is exactly what I've been talking about for the last several weeks on AMC. This iterative model continues in the middle of what I call like the between the ears. There's always this kind of like between the ears motion that happens, right? And it's like, while that's happening, you're going to see that this particular iteration typically goes more than one or two times. And often what happens is that you'll see it looks like this. You know, you'll get like a jump over the ear, and you'll do the same exact thing. So this ends up being like a little mini me right here of the entire process because it can, because it's already used that behavior to try to drive the price low. So what they would do is they're going to use the same exact behavior. It worked for 3 years. Why not do it again for another year? And you're using the same exact behavior to see if you can drive the price down again. And if you can, in my opinion, that's really where the SOW probably appears. Because I think if this ends up coming back down and for whatever reason it forms a new low, and I'm not saying it will, I just don't know yet. But if for whatever reason this forms a new low, I think that's the sign of weakness. And that means that you're probably in the long term just going to take it up to distribute. And you may not ever go back above 50, 60 bucks. You don't need to. You can stop halfway. It just depends on liquidity needs and whether or not your BlackRocks and your Vanguards have positions that they really want to get back to at some other higher level. If there's no sign of weakness, then this waveform has the ability to do what I call an M cross upward, which is like a 1, 2, 3, 4, and then the 5 ends up being a big move, and then you'll get like a 6, and then a 7 usually ends up being the breakout in an SOS. This is exactly what Wyckoff talks about in his schematics. I just turned it into sine waves and cat ears because that's just who I am. I don't know. It was my way of understanding it. It makes more sense to me. And I can identify these a little more readily. So what we were talking about recently is the exact same thing. It's exactly the same. It's almost identical in some ways, and it kind of freaks me out how similar they are. So I don't have any reason to think that you would go beyond 40 to 50 or whatever before backing up. And that's what I'm trying to say. And then you would do the same motif again, potentially for another year. And in 2026, it's just this red year. It starts really good and ends kind of crappy. But you do a full circle to November date where it's basically back to where it is. So they can do that with confidence because they have the ability to move the market. They hold all the cards, right? And they can basically use the massive amount of money and essentially manipulate retail into buying at the right times, et cetera, to drive that price to where they want it to go, and then come back and they're just richer for it. They're in the same spot again. They could do it again. And they'll just keep doing it again and again until they can't. And that's the big thing about iterative motions is that you think that they're over and then they're just not. You just keep going. This is the same thing we're talking about right here. When I talk about the iterative motion of the cat ear, it's no different right here. It's between the ears. And the question is always like, what happens when it breaks out? Does it make the jump? And I'm saying that I don't think it makes the jump. If it did make the jump, this would be like supported and then break out above whatever, and we'll have to do the bigger creek. It'd be an M cross up like that. And you'd end up going pretty far, probably like $7. And then coming back down on 5 or whatever. And that starts your bigger squeeze motion. If for whatever reason there's no spring, that could happen. That's an LPS model because at this point we haven't made a lower low. So it is what it is. So I think that the burden of proof is on other people. In this particular case, not on me. I think the burden of proof is on other people to tell me why they think it would go beyond 50. When there's like 100 different reasons that I could probably find that it shouldn't go beyond there without a big backup. That to me is not a really difficult question, I think it's frustrating, and that's where I think people are like, well, I don't get why do you think this won't go farther? You said before it goes farther. Because before I wasn't using the shift value. I mean, I didn't start using that until, I don't know, may have been like late summer or October last year. So the greater part of the first half of the schematic, I wasn't using that. I had another wave that I used that suggested it took a really long time, but didn't really tell me that it wouldn't go as high. When I started really diving into that shift value was back here. I mean, actually, no, it was December because it was right after this is pretty recent. So, I mean, that's the reason I changed my opinion. Better to do it now than when we're up there and you're waiting for something that may never come, right? So, I mean, people can bemoan it and say, like, well, he's not consistent, but I don't really care because if it only hits 50 and I saw it a year ahead of time or 2 years ahead of time or whatever, a year ahead of time, I guess, since that would be December to like roughly a year, I'm not going to whine about it. I'm just going to say, all right, well, it's there. I'm ready to offload. I'm happy with that, you know? As opposed to like getting up here and being like, well, I did TA 2 years ago. It must still be exactly the same. And never having like looked at it deeper. Because I'm not a quantum computer. I mean, it might surprise some of you guys. You're like, oh boy. No, I'm honestly, I'm not sure. I'm never sure because I don't know perfectly what an operator like a BlackRock or a Vanguard is thinking. And I think there's a problem into assuming that you're always going to be right because you found this or that on a chart. I don't even know if it's going to get to 40 or 50. To be fair, I think that's a huge call out. But I see a lot of evidence that suggests that's very likely to happen. And you see that this same pattern of iteration, of copy-paste iteration, builds into itself over time. A model, and that model has been used by AMC frequently. And it makes me think that there is a termination point where this no longer works. Meaning that like it gets to a decision moment. The worst case scenario on the big picture for AMC is the scenario of the cat ear, the macro cat ear. What you don't want is you don't really want to see something like this build out. And I guess some people wouldn't really care. If it got to like 160 or something in the future, they wouldn't care. But frankly, like even that is kind of bullish. The worst case scenario here is that this does what it basically what it looks like in 2000 and I mean it's essentially like a macro distribution. It's essentially like a massive version of what happened here, right? And this is, by the way, if you go look at that fractal, if you want to be a fractal person, go look at July, August of 2021, and you're going to see this bottom right here, which I called out a long time ago. I said it may form a bottom just like that. It may form a bottom just like this. And I showed a bunch of examples, and we did a bunch of different analytics on them. This is the worst case scenario, in my opinion, which is that essentially it just follows a model of distribution. And it never goes back up again, hits these markers, and fakes you out, makes you think it's going to go, and then ultimately like spills all the way down to, pennies. I think it happens in 2029, probably, based on the measurements and everything. That seems likely, and the fact that that's where their debt maturities need to be rolled or whatever. So why not keep it essentially at $15 and like wrap around this area and consolidate for 3 years? I mean, I would. If I had the power to accumulate and get ready massive positions, then that's pretty common sense. And at the end of the day, this just represents like an M cross, It could be a lot worse. I mean, I could find a dozen other ways this could go, and it could be a little bit more bearish. But I think this is a pretty bullish way to go. And really see if we can get back up here and offload stuff. See what happens. If they take it down again, does it form a new low? Does it like go lower? That's an SOW. Doesn't have to be much lower, but it could drop just a little bit, and then you got a big sign of weakness pointing down. And then you just take it up to distribute. Or does it have like serious strength and it just cannot ever make another low again? Goes to like $3 next time, $3.50, and just doesn't go. Leaves the doors back open both ways. You don't have to worry about it as much, right? Then the M cross has a potential that this shrinking right here, which is going to match this one right here, it's essentially going to be the same exact thing but repeated. That it could have potentially like a very similar, and this would probably be like an up thrust here, but it would have a very similar build out, except that when it gets to the end, this would be the third one, it might actually break out. And that's a really good feeling, because then if that happens, I think it's pretty likely that this could go very, very, very far. But we're not there yet. Maybe then we can start talking about this ultimate like trend here. This guy from way back that was lost in 2021. And I think we might be talking about going back up there potentially. But I mean, to me, that's like way off in the future, probably going to be like a 50-50 around this area. That's usually how it is. Yeah. It's pretty normal. If this was a small chart, that's the way I would look at it. So that's the way I'm trying to do it. Tesla's still up pretty far today. Not really looking at the chart very much. I'm just kind of looking at the numbers. It's up 19%. I don't see any major issues right now. It's still heavy volume considering. So we may get a gap up tomorrow if we don't see end of day something. I wish I could say that everything's coming back to life on my own portfolio, but it's kind of a mixed bag. So I'm genuinely surprised. I thought this was going to make me some money today. Oh well. I'm not sure why it's just not moving. I guess that's life. Boo-hoo, boo-hoo, Booksy, boo-hoo. Yeah. I mean, I'm pretty ticked off about the SPY calls. I don't really care that much about the Tesla ones right now. The SPY ones are really irritating me. They're not like expiring to, Friday, so I don't get what the deal is. Maybe I'll just roll them out, but at this point, what good would that do? I just picked the wrong ones, I guess. Man, oh man. What a crazy moment. And then you have nothing to show for it. Gosh. All right, let's take a look at this. Let's take a look at this breakout here. I don't think it's necessarily bad. I mean, there is a little bit of a loss here in terms of that. There was a little bit of a narrowing that happened and then it dropped. But, it's not much. What I mean is like the narrowing was started at 248 and then it kind of lost a little bit of momentum going up to about there. And that's a 382 retrace. That's about right. I think it's a 38% retrace on a wedge. So it may just continue now. We might see a really green day for Tesla. I mean, that'd be an insane move. Probably going to look pretty similar on SPY. Yeah, there's the wedge. I don't see any problem with that. It's a rising wedge. It did a 618 retrace. So if it comes back above the top now, I think it's bullish behavior. And then it breaks out again. We might be able to use, and it's an if question, I don't know. I mean, it could still bounce around a bit to the end of the day. There's no rush. We may be able to use a trajectory, but I'm not going to do it. I'm just going to kind of keep what I have and then use it. So I think this is okay. I'm not seeing a high volume sell-off, on that peak right there. So RSI went down, but that's normal. That's the 3 minute. Again, it was rising wedge, so if you guys are messaging me on like Discord or anything right now, just know that I'm not on there right this moment. I'm like off of it because when I stream, it's crappy if I'm on Discord. So, yep, you're right. I don't think so. I think there could always be retracement, but I don't think it's going to just crash. If you have something really negative, maybe, but I think there's a pretty strong chance that even if it did drop, like it's going to rebound. My only concern at this point is, I guess, like a deeper retracement in extended hours, maybe opening low, but that's not a huge deal. It just kind of is what it is. So if that wick was just an attempt to kind of hit a target, the 618 is actually right where you would think you would need to retrace. So it's possible. That is the level we talked about, the 250 area right here. So yeah, I mean, it's possible this could do like a greater retracement. And then tomorrow have another big move. I mean, 10% or whatever, 8% is huge. So if it closes that high, I mean, that's a huge move. That Nick P guy. Yeah, 4 to 450 sounds about right. Yep. Yeah, there's really nothing. I mean, there's nothing to say about it right now. I mean, 20%'s huge, 10%'s huge. They're all way up there. And like I said, the news had to be there, but once it's there, there's not really much stopping bulls at this point, except some of these like areas they could bonk their head. So retracements are there for the taking if the market wants them, but I don't know if it's going to be able to do it in extended trading hours. I also don't know at this point if what that exactly would accomplish, except to just kind of give people an out who did not, again, like who didn't see this coming. But if you're trying to squeeze the market, that's what I'm saying. Bears might jump on it in extended hours where there's less trading to try to drive it back down to cover again in the morning. That wouldn't surprise me. Holy cow, man. I think I'm going to make a full recovery on this Tesla move. Now we're talking the high risk situation because it's like, now what? You know? Do I just take what I got and walk? Let it be a victory, recovery? Or do I wait one more day and see if this works? I got 25 minutes or so to decide. How confident are you, Booksy, about that trajectory? I mean, I'm pretty dang confident. Obviously, I came on and made a stream about it. What happens if it dumps to 250 tomorrow, which seems probable? Does it just rocket again? And if that, even if it does, are your, at that point, your calls like completely shot anyways? That's certainly a very likely target. It's weirdly like late in the day too. It's kind of about, it's about an hour after the open. Oh man, this is tough. But is it too overbought? Let's take a look. 15-minute is, but that's not been a great indicator on Tesla. 30 minutes been a lot better. Yeah, 30 minutes overbought. I would not risk it. I agree. I mean, I'm thinking I might just exit. And if nothing else, I could just play the morning and just do it again, but with a better call instead of a shite position, which is really where I'm at right now. I'm like, yeah, this position is garbage. So, oh, it's way up. They're already up. I don't even need to do it. If I can get out with that, I'll be in good shape. That'd be some kind of miracle. So I'm not going to risk it anymore. I'm going to try. I did it. I'm out. I cannot believe this. I made money on... You guys aren't going to believe this, but I had a... This never happens. I'm going to tell you right now that I might enter like a smaller position here with what I have left, but I'm going to tell you right now, like, I have never, ever seen, ever, I got profit. I have never, ever, ever seen a position go as red as my position went with those call options on Tesla and recover. Ever. You guys are like, how red were they? How much did you hold on for? I held through the whole thing, guys. I've had those before April 2nd. I held through all of it. Some of them I got like later, but I averaged out. But never have I ever been down. I think I was down like 93%, which is insane. Why in the world would you be holding on to 93% loss? Because I don't know. I don't know why. I guess I thought, like, I kept seeing this, like, in my mind, like, that something was wrong. And it just didn't seem like it was going to go. I figured if it went down, it'd have some bigger reaction up. But then I started watching the timing. I don't know. Now you know why I was, like, kicking myself a bit. Because I'm like, why did I do this? I just kept saying, like, this is not going to happen. This is horrible trading practice. You should never, ever hold below 50%. Almost ever. Because it almost never, ever recovers. Like, the probability that it's going to recover is basically zero. You know? What a freaking day. Well, I'll tell you this. Right now, I don't know if Tesla's going to go to the moon or not. But right now, I would suggest to you that, and finally the SPY calls are moving, which is good. I'll hold on to those. That was a smaller position anyways. But I'll tell you right now that I would not normally come on here and try to pump anything. And when I saw it, I just knew like there was something, I guess, just some discernment about it that just was like, I think I need to just say it. Right now, I don't really see any major sign of weakness. So I know I just told you guys that I exited a position. I exited a position with profit that was basically at a complete loss, like 2 hours ago. So I'm not going to whine about it. But if it goes higher, great. I'm so happy if you guys managed to randomly get in with me this morning. You would be making a fortune probably. I'm not suggesting that it has to go back down. But what I am seeing is that there is a chance here that we may see a retracement still. I don't know for a fact, but there's a I mean, look, to me, it's just going to squeeze probably, but I think there's a good chance here that you're about halfway up this move. And I don't see why you couldn't do like a quick pull down. It may not go all the way back to the 618. We will see. But I have this target on my chart. I've had it for a little while, and it's the second gap right here. And we're kind of testing right now. If you look backwards, like on Tesla, kind of testing these tops at 270. So maybe from 270 to like 282, it just won't even like flinch. It'll just go. But if it does have a pull down here, this is not a bad place, because I think you could do like a 50% retracement and come a little bit lower in the morning. And that might actually make sense, because we come back to test that first top, which we haven't checked yet. Yeah, we haven't checked this top right here at 250. What is that top? What is that high? 252, right on the dot. So yeah, the 252 mark is looking pretty attractive to me. It's like a 50% retracement on the first move. But we'll see. 21% is pretty huge. So if this thing opens up at 252, I'd be pretty bullish. If it opens like a little bit higher or whatever, don't be. I wouldn't even be that worried if it dropped again. But there's not really a lot of evidence. I can't find any other trends here. Not really. This trend is actually wider than that. So, and I don't know why we would go back if we're trying to squeeze. So I just don't see that as likely. Like there is another, I suppose, like right there. Anyways, it would make sense to me to have the M here. 1, 2, and then back and then go. Again, all the way up to 300. And 250 to 300 is still a huge move. So for what it's worth, that's still like another 20% day. But I think profit taking, we'll see. You know, I don't want to overthink it, but we'll see. I'm going to shoot myself in the foot about it either. And then SPY, it is making a top right now that looks a smidge bearish on the 3-minute. It's got the, yeah, it's just a smidge bearish. It's got the, I said if it came over here, I'd be a little more bullish, but it's actually sitting underneath. Let me see where that is, where that level is. Yeah, it's the same story as Tesla. I think it's going to come back to that marker probably. This looks divergent to me right here. That looks like a bearish divergence right there. It's a 3-minute time frame. You need to take it with a grain of salt. Let's check the 6. 6 is the same, but it also broke back above its moving average. So I don't know, man. If it goes, it goes. I mean, what are you going to do? I bought 40 calls at like 5 cents right down here. So any kind of money making on this is already like a plus. I mean, the hysterical nature of it is not lost on me. Like the impeccably ridiculous call out is not lost on me. I'm like, yeah, you're just lucky to be here right now, Booksy, without a huge hole in your account. I do think once it hits that level, I'm probably, if we get up there tomorrow into Friday, I'm probably done for now. I think I'm going to sell a lot of positions. My calls are up 127%, which is pretty dang good. I don't know. I just don't think it's going to go. Let's look at 15 real quick. I just got a weird, I don't know, like part of me looks at that, I'm like, it's still healthy, it made a backup. And part of me is like, I could definitely see it doing like a widening here and then breaking back again. coming back down to 527 just seems really, really attractive. So I feel like investors are going to kind of jump on it and head back down there. Excuse me, sorry for sniffling in the microphone. You know what? I'm going to exit like 20. I got like 40, so I'm going to exit like 20 of them right now. And then, I mean, I'll hold the rest. It's kind of a crazy thing. Maybe not 20. I'm like feeling a little bit sheepish about it. I might do like a quarter of them. I just think it's going to go backwards. And I'm going to try it. So I think I'll get a good deal if it comes back down, but I don't want to completely exit. I don't see the point. It's not likely to come all the way back down now that it's hiking up again. We'll see. Wow. I cannot believe he did that. That's illegal. Wait a minute. Trump at open tweets, great time to buy. He can't do that. That's against the law. You're not allowed, a political figure is not allowed to pump a stock. The other guy got in trouble for that too. So. Some guy did that recently. Got in big trouble. What a day, what a day, what a day, what a day, what a day. Yeah, I'm still thinking like we're probably about halfway there for most charts. Let me check AMC one more time. May need to stop a little early here. This is completely nothing to do with the stock market, I promise, or the fact that I just exited a position. But my ankle's been doing something really weird this morning, and it's an old person thing because that's never happened to me before. And usually everything that happens now that's brand new is probably because of age. But it's doing some weird thing. I'm having these like spasms that are like pain spasms. I don't know if it's like nerve problems or pinched nerves. It's like running down the back of my Achilles really bad. I'm trying to like stretch out, but I need to like stand up. Yeah, I think everything's kind of about halfway. About halfway to that mark, so just goes right back up. All right, so tomorrow, very early, I think we might get a draw back down. It could happen in extended hours and nobody gets to participate in it. I mean, that's a possibility. So I know with SPY and IWM, you can trade 15 minutes after the close if you're in options. So if something like that happened really fast, it might be worth checking it out if it was like within the first 15 minutes of market close. But I don't know, man. I don't know if this is going to go back down. Well, whatever. I'm going to flip-flop on it because technically, again, it's kind of bearish divergence on some of these time frames, very small. It's a retracement level. It's a retest level. We did push away from it earlier today, but when we dropped low here after that retracement, that is a kind of SOW. It's not a bad one because in this case, it's just a healthy retracement, right? But it did technically come back and make a lower low after pushing up. So the retracement happened and then we're pushing up again and the volume is kind of like meh. It's like it's okay. It's lower than the first push. It's trying to push higher without as much volume. It did get over the top, so I guess if it held, you would just say, okay, it's going to go. But as soon as this dropped, if this dropped beneath, on SPY, for example, if it dropped beneath 539.62, that area, it's going to probably dump pretty hard because that divergence would like catch up to it. And then the walk down may not last forever, but it would be basically to come back down to the, I don't think it would, to the 525 floor, that area, 528. And that's not a bad thing. I think that'd be a good thing. Now, if it's an S curve, it's just going to hold the level, the level I just talked about at like 539.60s. It'll just hold it and then it'll break. And you probably just finish the 50-50. But I don't know why you would do that right this second going into close. Seems a little bit strange to like go all the way up in like one fell swoop. But it's not impossible. I don't know. Nothing's impossible in the market. So it's not impossible, but it looks like it would go all the way up to like 567. Just seems like a bad idea going into market close because you wouldn't really be able to capitalize on it. So I don't see why not let the shorts take it back down and then just do it again first thing tomorrow, maybe around like 30 to 40 minutes after the open, just rock it again. Assuming there's no change in the news. Tesla does not have that SOW, so it doesn't really have a pullback at all. It kind of backed up and advanced without making a lower low. So in theory, that same kind of line of thinking doesn't really apply to SPY or to that we're talking about on SPY. It doesn't really apply to Tesla right now. It's higher. It's like it's crafted higher, so maybe that means that it develops like a widening here that doesn't ever go beneath like 260 again. And that actually doesn't hurt much here on Tesla because I think long-term Tesla is kind of bearish anyways. So when you look at this, it could be a widening top that's forming before a breakout again. And that does seem probable to me. But remember, overall, everything looked like it would kind of finish by about 1 to 2:30 tomorrow, depending on your time zone. It's basically, let's say 1 to 3 hours before close. Let's just say it that way. Maybe 1 to 2 hours before close, it would be finished. So the move itself does not have like a longevity to it. It's very short. So this is going to be kind of a flash in the pan in the grand scheme of things. I think this is another part of the reason I think we might need a pullback in the middle is because aside from being up like really high, is that you would want to have some kind of a range up top. And usually what happens is that the pullback will help define that range. So like if you had a pullback right here to like 260 on Tesla, now you have like a wider, you have 2 points of interest. You have like a wider step. And then what you can do is take that up to the top and that gives you like space. See that on the top. So then you can develop like a breakdown that could take from here all the way out until Friday. I mean, it frankly could be quite long-winded. If it goes that far, it would be here until Friday around midday. And that gives you a lot of time, to generate like a distribution top. So then basically going into close, I don't know, probably could be a pretty big retracement at that point. I don't know what that retracement would be, but it'd probably be pretty huge. There's a lot of lines on this chart, Booksy. Probably back down to this top at like 288. The 236 is 294, but that doesn't really make a lot of sense. Kind of on the top here, but going to be utilizing this range, which goes from 273 up to 301. So, yeah, no, it makes sense. It makes sense you might come back to here and do a full 382, retrace. It could be that bad going into Monday. Then what? I don't know. We'll worry about that tomorrow or Friday. But yeah, usually there's some kind of a sideways action, and that build out can give you a sense of like how wide it is. Right now we've got one, but it's on the bottom. It's really wide. So again, I kind of feel like we're sort of missing a piece here. We're missing something else here that would tell us maybe where it's going to come to. When it's going to break down, I mean. Let's see what that looks like on the S&P 500. I haven't really talked about AMC and GME very much. They're sort of just kind of tag along at the moment, but I do think they're in a similar motion, right? So I don't look at this as necessarily the same because this hasn't really broken out just yet of its high push. It still looks like it's in the M stage. So in a pullback in this case, it's kind of what I had on the chart here. Like you might have an M, it's just this is really extreme. And then you could have a pullback that comes pretty low. I would think it needed to come back to this level at 275. If it does a pullback, it'd probably be 275. Because I don't necessarily think this happens again. I mean, it could. I don't know. I shouldn't take it off because it could come back down far. But I think that is the level you want to beat. That's where that platform drop is on the M cross down. So I don't know if that's a 50% retracement of the move or something. And then it would be probably pretty fast, again, back to the upside. Looks like it should be going all the way up, but who knows? We may get stuck up. AMC is kind of garbage like this sometimes. We may not go all the way. We may only hit like 319. People would be mad, but remember, like I think AMC might continue to have some pumps here in store. So I can't believe he did that. I mean, if it's something like, it doesn't matter what it is, it's against the law. I mean, period. The law is the law, whether he knows it or not. You can be ignorant of the law and still break the law. It happens all the time. So I'm not going to make excuses for that, you know, but that's not legal. So he said DJT, which is his Trump thing. So True Social thing, right? Donald something, Donald Jr. Trump, Donald Jacob Trump. I don't know. I don't know what it is supposed to stand for, but I mean, Tesla looks like it's trying to just kind of hold on and go, but I'm not sure yet. I don't know, man. Don't really care either way, I guess. Yeah, it looks like they're holding up, so I don't know. Maybe that is an option that they're just not going to take. You know, you don't want to let the bears out completely, so if you're just trying to squeeze, you just keep going sometimes. Someone coming over my door. I don't know who it is. I think they're doing road work or something. I'll be right back. Just a minute. All right, I'm back. Black Thursday. Love to hear your thoughts. Baby products. I thought there was some kind of like controversy about her products or that product line, or was that somebody else's? Oh, was it like Gwyneth Paltrow or something? Her business. Man, I can't believe Tesla's still going. That's crazy to me. I mean, I'm happy with what I've got. I got a really good position in SPY, but I'm just dumbfounded today. Took so long for that position to get green too. Just unbelievable. On that move this morning, or whenever it was this afternoon. It's still divergent. I don't know. Your guess is as good as mine on this one, guys. I just think it's going up on a bit of weakness. I could just see them rug pulling it right after the bell closes, so it'll be one or the other. They're either going to rug pull it down to 530 or they're going to like rock it. Yeah, look at that. That's the 15-minute moving average too. It's going to be that right in that pocket. That was the tree guy. They're going to cut back away from the lines. I'm actually kind of happy they're doing it, but I had to warn him about one of our trees. One of our trees is like a widowmaker, so I was like, you better be careful. I was like, there's one tree over there that's like dead, so I don't want you guys getting hurt. 250% up on those SPY calls. That's crazy. Still, you guys are like, I didn't expect a lot more, so I'm kind of bummed out. If you come back again, I'll be going to 481. I don't know, man. I think this is a reasonable backup. And a widening top happens quite often in the market, so I'm not saying it can't just go. I'm just sitting in my position. I just would not be surprised if it came back down first thing tomorrow or in extended hours, and then bounced off and went. The way it's going right now, you can see it's pressing up. It definitely looks like it's trying to just get that pop. I think it'd be a pretty big move, and I did say as much that I thought it might squeeze. That's the title of the video, but it's a little early. I don't know. To me, it's like you still have a lot of time, so why not generate like another trend marker here? And the M is in the right spot. You see that? It's like Yeah, I could totally get why it would just go. I'm looking at this like it could be an S curve. Looks like it just ready to pop to like 578. But I'm also staring at this like why not come back right now and like get that support and then really pop tomorrow early morning, and get there by the afternoon. This looks right to me. I'm just saying. But, it's the market. Who cares? It's SPY. If people think that it's going to keep going, they'll just keep buying it. But this to me would make sense. And a widening top is usually pretty bullish anyways. So if it widens on the top here, I still think it's not going to break. I don't think it's going to break down. I think very likely it still breaks out. I don't think we're there yet, is what I'm trying to say. All I know is that we've got some time. I'm just gonna say it again. Sorry, I sounded like I was responding to somebody else, but I read your comment again, and then I was like, I need to just kind of repeat that because it does not. This move as an S curve would be so tight. It would basically open high, which is strange. And I mean, I guess if you wanted to open up here and then drag it back down to like 545 and then go again, maybe, but it seems a little bizarre to me. I don't know. I'm not able to tell the future. So right here, this is man, I really wish I had the I'm sorry that I didn't get on earlier, guys. I know some of you guys aren't even really looking at the Discord group. I really wish I had gotten on earlier because it started happening like 10 minutes after I got on. I was trying to explain what I was thinking and then it starts happening. I feel like I didn't give people an opportunity. I'm pretty bummed about it, actually. I wish I had given you guys a better opportunity to make some more money. Like, we saw some things yesterday that suggested we could go up, but it wasn't the same this morning when I was looking at. So, just, man. Because I know that it was really important for me to put that money back in my pocket that was lost during some of that April 2nd stuff. So I know that would have been really beneficial to everybody. It's still not over, but you are going to be in a second half here trying to chase some stuff. Usually, as the move progresses, you will get more and more volatile. That's pretty normal. And especially as you get towards the top, you're going to start seeing steeper drawdowns. So an initial push up might be pretty good, and then you might get a really big drawdown as you approach the top. So just be aware that if you start seeing that volatility, like not in the IV, but in the price, and if you start seeing that, you might be coming into that top zone, especially for Tesla's like 300s. I would be looking at that, but it has to also break out of this level. That might be what they're going for right now. This is kind of a widening as well. It's right there. And that's it. Market's closed. So I think they were going for that resistance right here along that blue line coming across. That's the larger widening, which was another target that I had that just didn't seem likely to hit, but I kind of kept it there. So that's kind of like a 50-50 marker for the move, isn't it? All right, let's see what we're doing in extended hours. So the SPY closed at 453.14. So I'm going to mark that off, 453.14. And we'll kind of monitor it for a few minutes, see what happens. And then I'll be done today, I think. Sorry, 543. I said 453. I meant 543. Just you know, it's just age. Sometimes I mix my numbers up a bit. HNST. Yeah, let's take a look. Let's take a look. I'll keep stupid IWM. Excuse my language, but I'm just so sick of IWM. The small caps just wrecked me. I made money on small caps before, but I just don't know how to trade this market right now with small caps. I was not successful ever in it. I'm just really frustrated by that whole interaction. This is Mara, M-A-R-A. I don't know what's going to happen here with a rebound, but I assume it could come all the way back up pretty far to like 17. If it can break out right now, it should come all the way up to like 17. Maybe even 19 to 20. But I don't think Mara is likely going to do much else. Let's look at this other guy, HNST, Honest. Oh yeah, Honest, the baby products. I think when our son was really little, we tried some of these, but I don't remember feeling like overwhelmingly like they were super positive or something. I just kind of was like, yeah, they're all right, you know, it's baby products. I think she's supposedly like, they tell you exactly what's in them. They try to use good products. I don't know. Oh, wow. What happened to her company? Why did it go like red, and then just, it's the weirdest looking chart. Usually the market's very future looking. Revenue's up to 99, 80, 80, 80, 83, 86, 90, 86, averaging higher revenue, 99, almost 100 million. So revenue has been steadily increasing. It looks like that's reflecting as well in some of the EPS stuff. It's like minor misses on like value, you know, earnings per share, but it's nothing crazy. Some of these early ones are definitely bigger. Whatever they did here, it was like almost like a flip of a switch. That's very strange. What happened right here is really odd. I can't get this thing off. SPY's just kind of dancing where it's at. It's not really moving. What is going on? Go away, financial thing. There we go. It's really weird. It's like, it really is like all of a sudden it's just infinitely better right here. And not just because the price went up, which is odd. They brought in a new boredom, rolled out a diverse line. Yeah, maybe. Something must have happened because it's like all of a sudden their profits start swinging up and their EPS is better. She's a smart person and she brought some people in if she was like having trouble. I don't know. So a lot of people don't want to do that. They don't want to. I mean, I don't know. A lot of people, that's saying a lot. I don't know. That's not really giving her enough credit. There's probably a lot of people who would do that, but some people wouldn't. They're stubborn. All right. So that's your creek. Very high volume right here. And high volume throughout that top right there. So we're going to keep that. It looks like a tartan, Scottish tartan pattern or something. Anyways, like a flannel. So let me look at this and see what I can see. This is curious. So the symmetry in the RSI actually started taking place back here on this bottom. And then you can see that that's where there's divergence. I don't know why I have that SPY ticker way over there. It's not really moving. I think they're keeping everything kind of clamped. There's no options trading benefit right now, unless you're just trying to like get in for a drop or for a run, I guess. Here's what I would say, and I don't know anything about this company, but I got to tell you, like right now, this doesn't look particularly great because this to me looks a little bit like what we call like an SOW, which is a weakness. It came back below this floor. Now I know it was ultimately like a spring-like action. It goes all the way up high, but there's a huge influx of selling. And then I look at these cat ears and I'm thinking to myself, well, if it's a cross up, you would still come back down, and this is not where this doesn't stop until you get pretty low, more than likely. And I'm kind of seeing that same thing here confirming in the symmetry. You can see that there's a symmetrical nature to this whole thing. These are the ears. This is the wave cross. And so there's a section right here that was divergent. And I think what we're probably seeing to some degree is that we're seeing this area unwinding finally in present time. So all those positions are going to be sold significantly higher. I mean, here to here, obviously that's a big move, but I think that's probably what we're seeing, and that's why you get this kind of weird symmetry. The reason I said I don't think it looks particularly good is because it actually lost, and that looks like a pretty straightforward ear down. Usually there's a 50-50, so it's kind of a sloppy one. It may not be as bad as I think, so I'm going to just take a look. I don't want to jump the gun. Hang on just a second. Can I call you right back? All right. So I don't want to jump the gun, but I think if the market has like a bounce right now, and we're going to call it like a dead cat, I think it's probably going to come up into this zone, maybe even as high as, yeah, this is that February area going into March right here. Maybe even as high as like 570, but I'm going to suggest to you that that's probably not necessarily, I don't think that's necessarily the end all be all for this move, because I think that what probably happens after that is that that's going to be a breakout, like a 50-50 breakout, market squeeze kind of thing. And it could go pretty far, but I think it's going to be an opportunity to sell again, because I don't see this as done timing wise. I don't think these things always have to be one-to-one. But when I see head and shoulders and then I see stuff like unwinding like this, I typically try to pay attention to the timing because it's often pretty close. So this would suggest this could be going down into July or August. Which kind of follows. I don't know. So this dip, see how this went like way below as well? So this dip goes way below the previous support level right here. It kind of hit it and then dived. So some would look at that and say it's like a spring. I'm going to look at it and suggest that based on the current market conditions, if nothing changes in the market, I don't know. We'll see. Maybe it's going to depend some on earnings too. Maybe this props up for a while until May. May earnings season might be an interesting time in the market because there's the sell in May, go away kind of motif, but a lot of the times the market actually has some pretty good returns from May to June. Anyways, I'd suggest that this is like a cat ear build out until that earnings, and then you could have it break back up, but it's more likely, in my opinion, that this is not quite done yet. Hard to say. And again, this makes it look really dramatic, but so the other thing we would look for is where that cross happened, and that's here. And so we would take a line through here, and that's going to be another pretty massive. I mean, it's low, 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 but that's a pretty massive pivot. And then another one here. That's probably the one right there. It seems ridiculous, but you got to remember when these things like take off, sometimes they leave a lot behind, and there are moments where it doesn't make a lot of sense. But this wave to the upside often would equal the wave to the downside. So like this motion right here would be somewhat similar to the top motion, and it is. You see that? I mean, it's the same exact measure, essentially. So that early reaction and then the unwinding of that position does not have to be equal, but it often is. And so this to me looks simple enough. Like, I think of it more like like this is another place. This would be like a 50-50 cross down for it. So yeah. All right. Well, it looks like SPY is ending flat. And I got a call to take. It looks like viewership kind of went off the cliff anyways. You guys are like, most people already left is what I'm trying to say. I don't think it necessarily comes down to 190, but that is where the SOW is. This looks like a massive widening. It's possible that it never comes back below like 378. There's another floor right there. I wouldn't put it past the market to kind of find another shelf to stop. And I think that's a potential stopping point. But I think it's just a short-term move, just like everything else. As you can see, like when this was going, it kind of frequently goes up and checks like 50. And I think you might see something similar to that here. Like there might be a lot of tests against the top and then drive back through. And I don't actually see this as a bad thing. It looks like an extension of the creek. So, and you can see why they may want to come back to that level. Also, like historically, 195. Honestly, at 195, this is like a pretty simple buy if it's a good company. So I'm going to put an alert at like 2. So maybe late year, it has a pretty big rally going into like January or February or something. But that's kind of crazy. Yeah, the move to 6 would be like now. Should be breaking out pretty soon if it's going to go. I mean, worst case scenario here is just no rebound at all. Like it could kind of just stop. That's sort of the worst case is like you get distributive action. I don't even think this is fair. I don't feel like it's going to stop there, but based on this, it doesn't look right. Yeah, I think this probably at least comes up to 515 or so. The reason I'm not sure is because this is a cross that would have to be jumped, and you can't just assume it's going to jump it. You have to wait for it to see it happen. The next marker is absolutely right where it should be. This is the February 24th marker that we keep talking about. It's on every stock. So it's right where it needs to be, and this cross up could happen, and that's a 50-50 up. So I certainly don't see why it couldn't happen. I mean, it's almost perfect. That's a 50% right off that previous floor. So if it pushes above 460, I think there's a really decent chance it's going to go up to 515, which isn't a huge move. But from that point forward, if it continues and it manages to hold a support, it doesn't just crash or something, yeah, I don't see why you couldn't just go right back up. And again, pretty massive potential for a squeeze here, maybe in the next week or so. Yeah. I don't see why not. You know, you've got levels right above. Again, 460 is going to be the biggest one. We're really right on it. It just punched above it, but it needs to get up above there. And that little pocket from 460 to 480 is kind of sticky, and then you look at 5. Those are pretty straightforward numbers. This little area, and then it's almost a guarantee it's going to go back up. I mean, at that point, there's nothing else to go to. You see what I mean? And then look at it's almost always embedded here. You can look at that trend right there. That's the trajectory markers. So it seems pretty likely that that would be the place to go. Maybe it's slower than expected. I don't know. I guess it could be. If it were me, I'd probably trade it to like 540 or something and not worry too much about anything else. All right, we'll see you guys tomorrow. Thanks.